Good morning, all of you. So, in the last class, we have started with the discussion of deduction of depreciation. So, we shall continue that. I have told you that there are four kinds of depreciation. We have started with the first one, which is the biggest out of all. That is the normal depreciation under the block scheme. And we have seen some of the conditions in that. We have seen only the definition of a block and what does block contains, which assets are there. And we have only seen the rates and when it becomes half. Okay, these are the very few things that we have seen in depreciation. Today entire day mostly we are going to do depreciation only. So let's go ahead with the next condition to claim depreciation, and that is to claim a depreciation under section 32 subsection 1 clause 2, the assessee needs to be the owner of the asset. Okay, without being an owner of the asset you cannot claim what? Depreciation. Ownership is one of the criteria to claim depreciation in section 32. So the question will arise, what do I mean by the term owner means what? Okay. Now, unfortunately, the term owner is not defined under the income tax law. It is not defined. So what shall I do now? So this matter went to Supreme Court long back in 1999. I will put the case in front of you. You try to tell me what is your opinion on this particular issue. Okay. I'll put the case in front of you what has happened long back in 1999. So there was an assessee by the name called as Mysore Minerals Limited. This was a case of Supreme Court in 1999. Now the assessee bought a building in March 1999. Obviously, the building was purchased for the purpose of business and profession. So assessee purchased the building. Pay attention on the month and the year also. That is important for us to answer this issue. The assessee took the possession of the building. The assessee paid the money to the seller, and the assessee also started using for business or profession. Okay. But one thing did not happen in 1999 March, that was the registration of the building. You need to also register the building with the relevant authorities, correct? You have to pay stamp duty, you have to pay registration, correct? To transfer the building in your name. Now that happened after a few months in June 1999. Now obviously this changes the financial year, correct? This is which financial year? 1998, 1999, and this is 99, 2000. Now the assessee was saying that because I have purchased the building, I took the possession also, I paid the money also, I also started using the building for business and profession. I should be getting the depreciation year itself in 98, 99. Okay. But the assessing officer was saying that one of the important criteria to claim depreciation is you need to be the owner of the asset. Okay. Now on paper, you became owner when? In June 1999, which is next year. Therefore, the AO said that I will give you depreciation in the next year. Okay. So the issue under consideration is when will you get the depreciation? So what is your opinion on this? I hope you understood the facts, correct? So what is your opinion? When should we get the depreciation? The term ownership is not defined under income tax law. Okay. What do I mean by owner? I don't know. As per income tax law, I don't know. All definitions cannot be given in the law. There are only 89 definitions which are there under section 2. Okay. So what is your opinion? Please tell me. First year or second year? Second year. The Supreme Court held in the case of Mysore Minerals Limited that the term ownership is not defined. Then the court will define the term ownership. The court said that what matters is the beneficial owner of the asset and not the legal owner. This sentence is very important. You need to write this sentence in the exam if it comes. What matters is beneficial owner, not the legal owner. Legal owner, registration, title, name, all of them are irrelevant under income tax law. If you have paid for the asset and you have got the rights to use the asset over all other person in this world, you have the exclusive right to use the asset. You have paid for it and you are using for the purpose of business and profession. Nobody can stop you to what? Claim depreciation under the income tax law. Okay. So this is what this case law is all about. Try to remember this case name if possible. Okay. So come to the textbook. We will read this case law from here, which is there in your book on page number 2.1. This is the case law which is there in front of you. So this is one of the examples which we are covering. There can be n number of similar examples which can come in your practical life. Everywhere you have to make sure that the term ownership is not defined. You have to claim depreciation as per the beneficial owner. Legal ownership is not relevant. This will also, listen. Then we will read. I'll give you some one or two more examples. This issue might also come in case of motor car. I purchased a motor car. I paid the money. I got the delivery of the car. I started using the car for the business and profession. But you might be knowing that the registration certificate of the car comes after a few days, correct? It will come generally state to state, it depends. It takes around 1.5 months, 2 months to get your registration number official. So till the time I am not getting my registration number, is it not my car? Yes, it is. I cannot claim depreciation. Yes, you can. The legal ownership will follow. It will come after 1 or 2 months. You have already become the beneficial owner of the car, correct? So you can continue to claim the depreciation. Okay. Please read this case law. Page number 2.1. Good morning, all the online students. Is it clear? Now, immediately after this, few more issues will come with respect to ownership. So we will address ownership first. Step by step, we need to go with one conditions. The next issue with respect to ownership is, in the absence of any information, generally what you are going to do in exams. This is what I'm telling you, what you are going to do in exams. In practical life, the issue which I am telling you now is very complicated. But in exams, what you are going to do? In case of a lease transaction, you are into the business of leasing, okay? You are giving something on lease to someone, some assets, maybe a motor vehicle or something like that. So who will claim depreciation in case of lease transaction? So CBDT has issued a circular in 2001, which says that in case of lease transaction, the lessor will claim depreciation. Lessor means the person who has given on lease, okay? So if nothing is mentioned in the paper, if the question is very silent, it just says that there is a lessor, there is a lessee, the lessor is giving something on lease to the lessee, let the lessor claim the depreciation. There is a CBDT circular which came in 2001. Similarly, in case of hire purchase transaction, Again, a CBDT has given a circular long back in the old income tax law in 1943, which says that in case of hire purchase, hire purchaser should claim depreciation. Who should claim depreciation? So this circular came in 2001. You may not remember the number of the year. It is just for your reference. And this circular came in 1943. So if nothing is mentioned, you follow this. If the sentence in the paper, question paper is just one line, that Mr. A lesser is giving something on lease to Mr. B, who will claim depreciation, you say Mr. A will claim. Mr. A hire purchase vendor is giving something on hire purchase to Mr. B, then Mr. B will claim, if nothing is mentioned. This is generally for exams, but in practical life, the things are not that easy. You have to look into the facts and circumstance of every case. That who is looking to be the owner of the asset. Let me give you one, again, a very important Supreme Court judgment. I'll put the facts in front of you. A very important judgment, a beautiful judgment, lot of facts I'm going to give you over here. Then you have to judge, analyze and tell me who will claim depreciation in this case. There is an assessee by the name called as ICDS Limited. This is the name of a finance company. This is a finance company. This is a judgment which is given by Supreme Court. This company is engaged in finance and leasing. They are mainly engaged in leasing cars. But they are not leasing cars for 1 or 2 days. You want to go somewhere out, so you are taking car for 1 or 2 days on lease. No. They are not engaged in that kind of activity. They are giving cars on leasing for long-term period. Suppose if you want a Toyota Fortuner or a Toyota Innova for 3 years, okay, on lease, then you should go to this company, okay. If you want for 1 or 2 days, don't go. They will not give you for 1 or 2 days. They provide cars on a long-term basis, long-term lease. So this is the assessee. And there is a customer. I am trying to explain their business model first. A customer will come to the assessee and will ask for a car. I want a particular car for 3 years, okay, or 5 years, long-term lease. The moment where customer will come to the assessee for a car, the assessee will go to the market, will buy that same car for the assessee, okay, as per the specification of the assessee. Assessee will say that I want a Toyota, this model, top model, middle model, lower model, whichever model you will say, I will buy. Accordingly, I will charge you the lease, correct? So the customer came to the assessee and asked for a car. The assessee went to the market, bought the car, and then gave that car on lease to whom? Customer, and obviously takes the lease rental from the customer every month, okay. Whatever is the lease rental, 30,000, 40,000, 50,000, whatever, that is the income of the car company. Now, there is one requirement under the Motor Vehicle Act. I'll tell you that requirement also, that if any company is engaged in a long-term lease of vehicle, then the vehicle should be in the name of the customer and not in the car company's name. What I said? If I give a car on a long-term lease, then the car should be in whose name? Customer's name, not the company's name, okay? Why so? Because who is going to run the car for the next 3 years? If something happens, then who should be blamed? The customer should be blamed, correct? If some accident happens, some crime happens, then the customer should be responsible, correct? Why the car company will take the responsibility? So that is the requirement of the Government of India as per the Motor Vehicle Act 1988. The customer is paying the lease rentals every month regularly. Now, who is the owner over here? Wait. For that, do you also want to listen the terms of agreement between both of them? Would you like to listen that also, being a judge? Before that, how can you make a judgment, correct? So I'll tell you the terms of agreement between both of them. The judge said that I cannot make any conclusion based on this information. Get the lease agreement between both of them. I'll tell you the terms and conditions of the lease and agreement. The condition number 1 was that the assessee will be the owner of the vehicle. It is written in the lease agreement. After the period of lease ends, the vehicle will go back to the assessee. In case of any default in paying the lease rentals, The assessee has the right to repossess the vehicle. The assessee has the right to what? Inspect the vehicle at any point of time, because ultimately the vehicle belongs to assessee. These were some of the conditions which were given in the agreement. Now let's see the point of assessing officer. Assessing officer is saying there are two conditions to claim depreciation. One is you need to be the owner of the asset. Second, you need to use the asset. The AO is saying that you are not doing either of the two. Now, how he is saying that you are not doing either of the two? Listen first one by one. The AO is saying that the vehicle should be used by the assessee. So the steering is not in the hands of the assessee. The steering in his whose hands? Customer's hands. So therefore, the AO is saying that, see the vision of the AO. In a leasing company, I am into the business of leasing and I should myself use the vehicle. Then how will I earn money? Are you able to understand or not? Please. To counter this point of assessing officer, the court said that the term use does not mean actual use. The term use means it should be used in the course of the business. Is the assessee using the vehicle in the course of leasing business? How can you use a vehicle in the course of leasing business? Tell me. By leasing it, but not by using it. Correct or not? So the AO is wrong at this point. Correct? So now the AO is countering the second argument. That on paper, who is the owner? That is the legal requirement of the law. Correct? So the AO is saying that one of the conditions to claim depreciation is you need to be the owner of the asset, and on paper the owner is customer, not the assessee. Again the court said that what matters is beneficial owner and not legal owner. The agreement itself says who is the owner. The agreement says that at the end of the lease period the vehicle will go to whom? Assessee. The proof of ownership lies in the agreement itself, and therefore the assessee should get the depreciation. So what I'm trying to say is, in general, you have to say this in exam, what is written on the board, check please. But in reality, you have to check what? The facts and circumstance of each and every case to determine who is the owner in a particular case. Okay. So this is beautiful case law, which is there in your book also. You can check it. I'll show you where it is. Wait. On page number 2.2, you can read this. And one more important thing, one more thing. After that, you read. The customer was also not claiming depreciation. Because the customer felt that he is not the owner. Customer is not claiming. You are not giving depreciation to the assessee also. Then who is the owner in this world? There has to be somebody now who should be the owner, correct? That is also mentioned in the case. You can read it. Just switch off that. Cannot find? Leave it. Wife call, yaar. You cannot miss. Wife call you are missing. You want to go home or not? Huh? वाइफ का 3 कॉल आया तो घर पे आज छोड़ेगी नहीं तुम्हारी बीवी तुम नहीं नहीं आवाज नहीं आया डोंट वरी इट्स ओके फोर्थ कॉल लीव एवरीथिंग गो post. Have you read? See the points which are mentioned in the agreement. Agreement itself says that who is the owner? Assessee has power to repossess the vehicle, correct? At the end of the lease period, who will be the owner? Assessee. Assessee has the right to inspect. So all these points are not dominating towards assessee. The proof of ownership lies in the agreement itself that assessee is the owner. Okay. So in real life, you have to check the facts like this. If the facts would have been slightly twisted, that at the end of the lease period, the vehicle will go to customer. Okay. Right? Then it would have been a case of hire purchase. Yes. Then who would have claimed depreciation in that case? The customer, the hire purchaser. Okay. But in exam, they will not twist you so much because the more they twist, they have to give you more facts in the paper. Okay. So they want to keep the facts limited because they don't want to extend the question unnecessarily. If they want to ask, they will ask you the same issue in the exam. ICDS versus CIT. Just for your kind information, whenever such things will come at the top of the case law, what do you mean by this? ICDS versus CIT means what? At some places, you will see CIT versus ICDS. At some places, you will see ICDS versus CIT. What is the difference? It means who was the one who went for appeal to the court. So in this case, who went for the appeal? The assessee went for the appeal. So assessee will be called as the appellant. And the other party, the income tax department, commissioner of income tax, will be called as respondent. Okay. So the whose name come first, that is an appellant. Sometime it will be CIT versus the assessee. It means the department has appealed in that case. Okay. You may not remember like this. Even if you remember just the case, that's okay. We are too early in the batch. You are very energetic. You will remember everything. ICDS versus CIT 2013 Supreme Court. After few days, this will go. Okay. After few days, this will go. After few days, I said, I don't remember versus this or versus that. After few days, this will also go. Even if all this goes, it doesn't matter to me and even to the institute. This should not go. Okay. The content should be there in the exam. Don't focus much on the heading. The heading may not be written in the exam. If you want to write this heading, write correctly then. Don't write wrong. Either you write correctly or you completely ignore. Okay. Don't write wrong. If you write wrong, then they will cut your marks, please. So we will come to the section 32, subsection 1, clause 2 for the very first time now. We will read from the Bare Act. How does this section looks actually? You can see on the first page of this chapter. Shall we read it once? There are a lot of things in this section. 80% of this chapter, this section is about understanding this particular paragraph only. Let's read it once and let's see which all terms we know, which all terms we don't know. So this is the section which gives you depreciation under block scheme. So I'm reading it in respect of building, machinery, plant or furniture being tangible assets, and second, know-how, patent, copyright, trademark, license, franchise, any other business or commercial right of similar nature being intangible asset, not being goodwill of business and profession, which I have told you, goodwill is not subject to depreciation. This has been inserted from 2020-21. Before 2020-21, this sentence was not there. It was allowed. From 2020-21, the government has stopped giving depreciation on goodwill. Okay. So in respect of, I will just read in short, in respect of a tangible asset or in respect of a intangible asset owned. Do we know the meaning of the term owned now? Yes. Wholly or partly by the assessee. Used. I don't know the meaning of use as of now. For the purpose of business and profession. Depreciation shall be allowed on WDV of the block of asset at what? Prescribed percentage. Now, one thing I would like to say here itself today only. in the entire income tax law or even in the GST law, wherever the word prescribe means will come, what will come? It means there are rules for it. Okay. The word prescribe means there has to be rules. Last lecture we have done depreciation rates. Nobody asked me that where it is written. Okay. 15%, 20%, 30%, 10%, 40%, correct? Where it is written? It is written in Rule 5 Sub Rule 1. Where it is written? Rule 5 Sub Rule 1. The rates of depreciation are prescribed in the rules. They are not in the act. Okay. If tomorrow you want to search any kind of rate for any asset, you have to go to the income tax rules. The act will not tell you. Okay. So wherever the word prescribe will come, it means there are rules. In fact, the word prescribed, for your information, is defined in section 2. Where it is defined? Let us see section 2 where it is written. Okay. See on the board, please. Wi-Fi नहीं है ना? हाँ? If I go to the income tax website, incometaxindia.gov.in, Income Tax Act, Section 2. See, which clause? Prescribe is defined in clause 33 of section 2, correct? What does it means? Prescribed by rules made under this act. It means everywhere, wherever you will see in the entire act word prescribe, there has to be some or the other rules. It will be there. Okay. Similarly, we have seen one more definition in the last class, 225A, definition of India. Yes. India means the territory of India plus the territorial water, continental shelf, exclusive economic zone, airspace above it, correct? So as and when we go ahead, I will also be going to this website again and again to give you the feel of what the BEAR Act is. We will interpret a lot of things from the website also, provided it should work. Okay, that is more important. Most of the time it doesn't work. So out of this paragraph, what all things we know? Very few things we know out of this entire paragraph. Do we know the meaning of building? Who told you? Did I say the definition of building ever? Are please say. Do we know the meaning of machinery? Do we know the meaning of plant? Do we know the meaning of furniture? Do we know the meaning of these individual assets? We don't know anything as of now. Okay. We may know after some time. Okay. In today's lecture. Do we know the meaning of owner? Yes. That is something which we have done. So I will strike off this. Okay. Do we know the meaning of used? Yes or no? No. When we did, yeah. What yes? Are put to use. We have not done the interpretation of the term used na so far. Correct or not? I have just said that to claim depreciation, you need to use the asset. Correct. But exactly what is the meaning that we have not seen. Correct. Do we know the definition of WDV? No. It is defined in the law in section 43, subsection 3. Do we know the meaning of block of asset? Yes. That is something which we have done in the last class. Correct. Do we know the prescribed rates of depreciation? Yes. That's we know. So out of this entire paragraph, we just know the block of asset definition. We know the rates of depreciation. And we know what do you mean by the term owner. Rest all things we need to do one by one. Shall I go ahead with them? After the entire chapter is done, you should be standing here on this page and you should be telling me the answer for each and everything. Okay. If we are able to do that, we are on the correct path. Okay. We don't have to see the 20 pages again and again. We should stand here. It will take 10-15 minutes. We will stand here. We will think about each and every term. We will try to recall the things and we will try to consolidate the chapter step by step. Shall I go ahead with the next part? So after this, the next condition to claim depreciation is you need to use the asset for either business or profession, whatever you are doing. Okay. So the question will arise, what do I mean by the term use? The law says, again, the law does not define the term use. In section 2, the definition of use is not there. Just like ownership definition is not there. So what do I mean by the term use, sir? The law says, CVDT says, the use means both. If you make an active use of an asset, that is also covered. If you make a passive use of an asset, that is also covered in the definition of use. Now let us understand the meaning of both of them. What do I mean by active use? This iPad, am I using actively? Obviously, I will claim depreciation on this iPad in my business and profession. Now, obviously, some iPads might have been kept over here or in the back office as a backup. If this doesn't work, then what? Okay. Is that also a need in the business? Yes. If this iPad is not working, then there has to be some replacement for them in the case of emergency. Ours is a very small business. Let's think about a big manufacturing entity where thousands of crores of investments are made in plant and machineries. If a plant and machinery doesn't work, they should have a backup or not, correct? Some emergency parts of the machinery, etc. are there. So passive use is that something which is ready for use. You are not using it in the business actively, but that is the need of the business as a backup. So even if you keep something as a backup, which is not actively getting used on this podium, but it is kept in the back office, in case of emergency, I will use it. That is also subject to what? Use, and you can claim depreciation on that also. But passive use have some limitation. I cannot say that this iPad is actively used and there are 50 iPads which are kept as what? Backup. That cannot be a backup. Then that is merely a manipulation of law. Correct? You can say one iPad is in a backup, two iPads is in a backup. For every class, there are two iPads which are kept as a backup. You cannot say 15, 20 iPads are kept as a backup. So passive use needs to be within the limits. Okay. Now, what is that limit? That I don't know. That depends upon case to case. That assessing officer might raise question on your limits. So you also need to be within your limits and keep one or two extra assets in your backup, and you can claim depreciation on that also without what? Without actually using them. Okay. So you can check it over here. Only read this much. Okay. On page number 1.5. While reading only, I'll ask you one question. You try to answer that. There was an assessee who bought a plant and machinery, who installed the plant and machinery, but he was not able to use the machinery because there was a shortage in the entire state of a raw material. The raw material is in shortage in the entire state. Now, obviously, the plant and machinery is itself of no use. There has to be some raw material now, which you need to put in that to manufacture something. Now, the raw material was what? In shortage. I was not getting the raw material in the entire state. And because of that, I was not able to use what? The machinery. Should I get depreciation? Yes, you can read it. If due to some extraordinary reason you are not able to use the machinery, you can claim depreciation. Example, shortage of raw material. Check it, please. So what we have done so far? let's see from here. There are 4 types of depreciation. Ownership means in case of lease, who will claim? In case of hire purchase, who will claim? Correct? Then this case law of ICDS, correct? Then what do I mean by the term use? Block of asset, tangible, intangible, rates of depreciation, and when depreciation will become half. So till here we have done everything. Okay. Shall I go ahead now? As per income tax law, please don't talk. You see this? The income tax law says that you have to claim depreciation. It is mandatory to claim depreciation, whether you like or you do not like, you have to claim the depreciation. I bought an asset, I don't want to claim depreciation. Still you have to claim depreciation. That is what income tax law wants to tell you. Okay. Now the question will arise. Why? Yes. Why they are forcing us to claim depreciation? Why? Let us try to understand. Anybody knows the answer to this question? Is it? No. No, beta. It's not that. Will income tax department ever have so much mercy on the assessee that they will, I don't want to claim. They are saying, no, you have to claim. Why are you not claiming? Please claim. There has to be some hidden agenda, correct? Any idea? You might have heard this sentence in CA Inter also. It is mandatory to claim depreciation, correct? No idea? Listen. So pay attention, please. Why the government is forcing us to claim depreciation? There was an assessee long back in 1998, 1999, who bought a building, pay attention, of 100 crore for business and profession. Okay. He did not claim depreciation, even though he should, but he did not claim. He said that I don't want depreciation. Okay. Then the matter went to assessment and the assessing officer said that no, you have to claim depreciation on this building. So claim the depreciation, that is 10% depreciation will come to 10 crore rupees. You have to claim the depreciation. So he forcefully gave me the deduction of 10 crore. I did not want, but he gave me. And obviously he will give me refund, correct? The assessee did not like this, so assessee went to the court. Okay. The assessee said, I don't want depreciation. The Supreme Court came with a judgment that claim of depreciation is optional. Okay. It is nowhere written in the law at that point of time that it is mandatory to claim depreciation. You cannot force anybody to claim. If they wish to claim, they will claim. If they do not wish to claim, let them not claim. Okay. Now we are going to learn very important principle today. Some of you might be knowing this principle. Over the period of time, you need to understand few principles of taxation law to understand taxation law in a better manner. Suppose if a Supreme Court gives a judgment, whatever judgment Supreme Court gives in your favor or against you, whatever it is, do the government has the power in next year in the budget to overrule that judgment and make a law? Louder. Yes, they can. Okay. The government has a power to amend the law and override the judgment. That's what they did in Finance Act 2001. And they put this explanation 5, which you are reading right now, explanation 5 to 32(1), correct? This came in 2001 and the government made an amendment that you need to mandatorily claim what? Depreciation. So this amendment came in 2001. Again, my discussion does not answer the question. Y. Correct? So I will come to that answer now. First, I need to show the flow in which the things have happened. Now I will tell you why the department is saying so, and why they are forcefully making this amendment, and why they are forcing us to claim what? Depreciation. Let's try to understand. Let's take two examples over here. One example here and one example below. Suppose I bought a building of 100 crore, same case. And if I claim depreciation, then every year I will get 10% deduction. Okay. Now say after 10 years. Okay. Suppose the WDV of the asset is how much? It is 30 crore. Okay. I am taking just a random number. Okay. It means over 10 years you have claimed how much depreciation? 70 crore depreciation you have claimed. Correct? Can I say on this 30% tax approximately you have saved every year? So what is the tax saved? How much? 21 crore is the saving because of the building. Correct? Now let's come to 10th year. After 10 years, the WDV of the asset is 30 crore. If you are claiming depreciation, are you putting the asset in the block of building? Louder. You have to put the asset in the block. Correct? Now after 10 years, if you want to sell this asset, okay? If you want to sell, suppose you are selling it for how much? What shall I write? How much? How can you sell a building for 40 crore which you bought for 100 crore? What kind of building you have bought here? Tell me as per some logical answer now. How can it be 80 also? It has to be much higher than what you have purchased now. There is something called as appreciation or not. Land, building, all these are appreciating asset na. Tell me some fair number na, please. 150 shall I take? Let's see that there is an appreciation of how much? 150 crore. 50 crore there is an appreciation. Okay. Now how do you claim capital gains in such case? As per block asset. You might have done in CA enter. In such cases, selling price would be 150. And the cost will be considered as no indexation. Remember, for block of asset, you don't get indexation first of all. Remember or not? Second, for block of asset, you do not take the cost as 100. You take the cost as how much? WDV is taken as cost. Therefore, your 120 crore will be what? Directly short-term capital gains. One more condition of block of asset. In block of asset, the gain is always short-term. Multiple things are there in, you have done all this in CA enter. Huh? You will do in CA final also in the chapter of capital gains. I am not saying we are not going to do that. But if you want to understand the logic of this, you need to know these things. If you put the asset in block, there are multiple disadvantages of putting the asset in block. First, you have to compare the selling price with WDV, which will be obviously lower than your cost. The gain will always be short term. Therefore, the tax rate will be always higher. Are you clear? Short term capital gains are taxable at 30%. Long term are taxable today at 12.5%. So you have to pay how much tax on this? 30% of 120 crore will come to how much? 36 crore. Correct? So because of this building, what you saved? What you saved? 21 crore. Barabar? Right? What you have to pay? 36. Now let's see, if I do not claim depreciation, then what will happen? Shall we? Let's see. The same example. I bought up the building for how much? 100 crore. No depreciation I want. Don't talk, please. So am I losing the tax benefit of 21 crore? Yes or no? That is gone. After 10 years, I am? What is the selling price? 150 crore. Okay. What is the cost of acquisition? Now I can take 100 crore. Some people can also index, correct? Yes. So the cost will further go up. There is a possibility that there is a loss also, correct? You don't have to pay anything out of your pocket. Let's assume there is no indexation. So on 50 crore, I will pay how much? 12.5%. That will come to how much tax? Approximately 6.25 crores. What is my net outflow over here? What is my net outflow over here? Tell me. Do you wish to claim depreciation? Tell me now, please. And that's the same assessees who are saying that we do not want to claim depreciation. Claiming depreciation leads to lot of negativity when we sell the asset. We do not get the benefit of reducing the cost. We do not get the benefit of long-term capital gains. We have to by default say that it is STCG. Therefore, we by default have to pay higher tax rate. One more disadvantage which we are not considering also. We do not get indexation while selling. Are you clear? If I take indexation over here, then to my gain will further go down, correct? It might go into losses also. Yes. So that is the reason people used to say that we do not want. But Finance Act 2001 has made it very clear that claim of depreciation is mandatory for every assessee. Are you clear? This one line has so much background in it. Okay. So every sentence has come with some kind of history. Everywhere I will try to speak about it. Okay. Don't worry. So shall we go back to our discussion now? Please tell where we stand now. Come here. We know this sentence now. As per explanation 5 to section 32(1), it is mandatory to claim depreciation. One last thing I would like to say, then I will go ahead with the next part of the discussion. Pay attention on the board, please. Sir, is the word building defined in the law? Let's talk about these four terms one by one. Okay. Pay attention on the board. Sir, is the word building defined? The answer is no. There is no definition of building in income tax law. So how will you understand the definition of building? If there is no definition in income tax law, how will you understand that term? In general terminology, correct? There is no official definition from law. Okay. Similarly, there is no official definition from law for furniture. There is no definition on furniture. This is furniture. The one which you are sitting on is also furniture. Okay. There is no official definition in the law for machinery also. Okay. There is no definition for building. There is no definition for furniture. There is no definition for machinery. But yes, the law has defined the term what? Plant. They have taken the pain of defining the term plant. Okay. They have defined that. Sir, where it is defined? Listen. Wait. They have defined in section 43, subsection 3. Here is the definition of plant. Now you will say, in the first lecture you told us that all definitions are there where? Section 2. Now suddenly you are changing your point, correct? So let me now clarify completely today. The definitions under any law can be at 3 places. In section 2, first of all. Now what is the importance of section 2 definition? If a definition is there in section 2, it means it will be applicable to the entire Income Tax Act. Okay. If a definition is there something in between like this, 43.3, 43.2, 43.1, 43.4, 44, 43.4, 44.5, 44.6. There are 6 definitions over here. These definitions will start with the words that for the purpose of this chapter, plant means this. What do you mean by this? This definition is specific to a chapter. It is not applicable to the entire act. You will also see certain definitions in future with me in income tax, where it will be written that for the purpose of this section, the definition is this. So it means those definitions are only for the purpose of a particular section. So you will find 3 kinds of definition. One which is applicable to the whole act. Where you will find them? Section 2. One which is applicable to a chapter. You will find out in respective chapters like this. One which is given inside the section. Okay. Inside the section, and it will be said for the purpose of this section, the meaning of this term is this. Are you clear? So this definition of plant we are learning for the entire syllabus or only for this chapter? Only for this chapter. You may have a different definition of plant future. Okay. In some other chapter, the definition of plant might differ, might change. Okay. So let us see what is the definition today for this chapter. They have defined in two parts. Plant includes few things, plant excludes few things. Okay. If you come over here, you will see what does it includes, what does it excludes. On the next page, page number 1.6. Plant includes what? Ships will be considered to be plant and they will be depreciated at what rate? 20%. Vehicles are considered to be plant, they will be depreciated at what rate? Depends. Some vehicles are 15, some are 30, some are even 45. Correct? In one case, even it is 45. Which is that case? 23rd August 2019, 31st March 2020, if you bought a vehicle on hire, which runs on hire. Correct? Books are also subject to plant and they are depreciable at 40%. Scientific apparatus, how much? Nothing mentioned then, how much? 15. Surgical equipment, 15. Now just wait. Just wait. Some people started taking the definition of plant literally. What does, don't see the board. What does the first thing comes to your mind if somebody tells you the word plant? Huh? Trees, leaf, right? Yes or no? Correct? If somebody tells us the word plant, we do not think about a factory and a machinery. Correct? So what they have excluded from your check. But does not include tea bushes. Tea bushes are the one which are used to grow tea in the tea farm. Okay. That will not be considered as a plant. Exclude that from here. For that, there is a separate section 33AB which will come later on. Okay. Livestock will not be considered as plant. For them, there is a separate section in the form of 36(1)(6) which will come later. Exclude that from the definition of plant. And building should not be considered as plant. Furniture should not be considered as plant. Fitting should not be considered as plant because these are also very specifically considered in the block of asset. Okay. So this is the definition of plant. Now there is a great history behind this definition also. Why this definition was drafted by the law like this. Okay. Let us try to understand. You will appreciate that such things have happened around 22 years back in 2003. After reading this definition, did you know the meaning of plant? Tell me. Has the law given us the meaning of plant? No, na? We don't know the meaning. Even today, it is a very inclusive and exclusive list. Correct? Just like the definition of income. Correct? Income includes all these things. But we don't know as per law what do I mean by the term income. Listen carefully. It's a beautiful story. For which the government made amendment in Finance Act 2003. What used to happen earlier? There was no definition of plant. There was no meaning of plant. Nobody knows what is plant. I don't know what is plant even today as per law. So I will go to the dictionary. If I open the dictionary and if I see the general meaning of the term plant, in the dictionary the term plant says plant means any apparatus or tool which is necessary to discharge any function. If there is any apparatus or tool in your hands, in your possession, which is necessary to discharge any function, you can tell that as what? As a plant. By that definition, this pencil can be called as what? It is a plant. Okay, because it is necessary to discharge my teaching function. Correct? This camera is also a plant. This entire building can also be called as a plant. This iPad can be called as a plant. This system, computer, etc., whatever is kept over here can be called as a plant. Now listen carefully. Because there is no official meaning in the law, what do I mean by the term plant? Some people used to raise question. Who are those some people? There are some specific industries. 3 specific industries used to raise question. First is a theater industry. Who used to run theaters? Okay. Please tell me, can you run theater in this classroom? Tell me. Can theater be run in this building? No. In this existing structure, what you have to do? Am I supposed to demolish this and reconstruct this as per the requirement of the theaters? I have to make a big screen of 70 mm. Yes, I cannot run theater in this classroom. Assassi says that a theater is a specifically designed building. This entire structure is an apparatus for me, which is necessary to discharge what? The function of my theater business. Therefore, whatever I have put in this theater, including the building, should be called as what? Plant, because this is specifically designed building. Are you clear or not? Second assassi came forward. Hotel business. Can I convert this building as a hotel? How? Which hotel has such kind of rooms? Without a bathroom? Where is the bathroom in this room? Please tell me, where will I go for the... Where is the conference room in this building? Should there be a conference room in a hotel? Should there be a banquet in the hotel? Should there be a restaurant in the hotel? Please tell me. Where is it? Please don't talk. So my question is, please. Can this building be in existing status be called as a hotel? You have to make many changes in this. If not demolish, at least you have to make many changes according to the requirement. The SRC is saying that my entire hotel is a plant because it is an apparatus which is necessary to discharge what? My hotel business functions. Therefore, my entire building, my entire structure, whatever furnitures are there inside it, everything has to be called as what? As a plant. Why the SSC is saying so? To claim 15% depreciation instead of what? 10%. Are you clear? Third assessee. Hospital. Can I convert this building into a hospital in the same status? No. You need to have separate rooms. You need to have different kind of facilities inside the hospital. You need to have operation theater. You need to have pathology. You need to have X-ray centers, CT scan centers, so on and so forth. Correct? I cannot convert this into what? Into a hospital suddenly. I need to make drastic changes in this. It will take years and years to make that. As I see you says that I have made this drastic changes and I have made this hospital according to my requirement. This entire hospital is a plant. Please give me 15% depreciation. To overcome this, in Finance Act 2003, the government made what? The changes in the definition of plant. Now, if you read the definition of plant, you will appreciate why they have excluded what? Building, furniture, and what? And fitting. You can just read it, it will come back. Okay. Page number 2.4. So your color book will give you the provision, will not give you the logics. Okay. For that, you need to read the act and you need to come to the main book. On the day of exam, if you remember the provision, that is okay. But to understand the subject, you need to know everything, why this provision is like this. Without that, we will not go ahead in any of the provision. No provision will be done in the class without knowing the provisions ka reason. So a building will be always a building, irrespective of whether it is a classes building or whether it is an hospital, theater or hotel building. Building will be subject to 10% depreciation only. Don't call that as a plant, please. So the bold and the bold letters are added by which Finance Act? 2003. Okay, there were Supreme Court judgments which used to give 15% depreciation to assessee before 2003. Okay, which assessees? These three assessees. So then the government realized that it is becoming very common. All the assessees are claiming this. So the government excluded from the definition of plant these three assets. Okay. Shall I go ahead? The next thing which I am saying over here is something which you would have done in CA Inter also. Without this, you will not understand. You would have not understood anything in depreciation. This was the must to understand the concept of depreciation. That to claim depreciation on the last day of the financial year. What is the last day of the financial year for our exam? 31st March 2026. On the last day of the financial year, you should fulfill two conditions if you want to claim depreciation on all the block of asset, plant, machinery, furniture, building, intangible assets. First of all, the block must be positive on the last day. Now, what do I mean by this? The amount column, value, the column in which you put the value of the asset, that has to be positive. Okay. Second, the block must not cease to exist on the last day. It means the quantity column should have at least one asset on the last day. Are you clear? At least one asset has to be there on the last day. So the quantity column should have at least one asset if you want to claim depreciation, and at the same time the amount column should be positive. At least 1 rupee has to be there in the amount column. Only then you will claim depreciation, otherwise you cannot claim depreciation. So let's take an example to understand this point. You tell me whether depreciation will be allowed to the assessee or not. Suppose there is an assessee who wants to claim depreciation on furniture. Furniture is depreciable at 10%. Okay. Now, opening WDV of the furniture is, I am making two column, quantity and amount. Suppose there are two quantity over here and the value of the asset is 2 lakh rupees. You don't write down, this is there in the book, don't worry. Now during the year I am purchasing one asset for 1 lakh rupees. Okay. Now at the end of the year there are three assets and the value is 3 lakh rupees. This is the WDV on the last day before depreciation. I am not selling any asset during the year. I may sell, in the next example, I will sell one or two assets. But in this case, am I fulfilling both the conditions? Yes. The quantity column should have at least one asset. Even if you sell two, it's okay. There has to be at least one asset. And the amount column should be positive. In this case, you can claim what? Depreciation. This is an ideal case to claim depreciation. Now let's make some changes. Suppose this is the quantity column, this is the amount column. The opening WDV is 2 asset and it is 2 lakh rupees. I purchased one asset for 1 lakh rupees. Therefore, the total quantity is 3 asset for 3 lakh rupees. Now, suppose I sold one asset for 5 lakh rupees. Okay. So now this has become negative. Quantity is still there. But the amount has become what? Will I get depreciation? The answer is no. In such cases, what will happen? After 20-25 days, we will see. In such cases, you have to compute what? Capital gains. Okay, we will see in the chapter of capital gains. If your block becomes negative, you are liable for capital gains. Okay. Let's take another example. In this also, I am making changes. Suppose there are three assets which worth 3 lakh rupees and I sold all three of them for 1 lakh rupees. The block is positive. Okay. But the quantity unfortunately has become what? Again, you cannot claim depreciation, correct? Again, in such cases, you have to go to the chapter of capital gains and compute what? Capital gains. So, if you want to claim depreciation, this should be at least 1 and this should be what? Positive. Only then you will claim depreciation. If either of the condition violate, you will not get the deduction of what? Depreciation. Okay. So this is what it is written in your book also. The example is also there over here. For your understanding, I don't think so you would require this example much because you guys know about this. Okay. But I have put the example for the sake of safety over here on page number 2.6. First case, ideal situation. Second case, capital gains, no depreciation. Third case, capital gains, no depreciation. Okay. Shall I go ahead? Now we will move ahead. We will take a pause from the normal depreciation for some time and we will go ahead with additional depreciation. Then we will again come back to normal depreciation. Let's talk about additional depreciation now. Additional depreciation is given under section 32 subsection 1 clause 2a. Pay attention please all of you. Pay attention. This came in Finance Act 2005. Beautiful section. Lot of issues are there in this section also. One by one we will address all of them. This section came with an intention to give a boom to the manufacturing sector in our economy. This section says that if you are engaged in manufacture of any article or thing, then you will get some extra depreciation. Okay. Is manufacturing sector important for the economy? Yes. It's very important. That is the sector which gives employment, correct? That is the sector that makes our country self-dependent. Yes. So therefore, giving benefits and encouragement to manufacturing sector is extremely important and the government is doing time and again in some or the other way. So the government says that you should be engaged in manufacture of any article or thing. You will be getting additional depreciation. How much? 20% extra. On what? On plant and machinery. On? But the plant and machinery has to be a new plant and machinery. Okay. I will write down the conditions on the board. The assessee should be, and the assessee should buy what? New plant and machinery. Then the assessee will get what? Extra 20%. The normal depreciation which you claim, extra 20% you will get. Okay. Now suppose if I buy a plant and machinery of 100 crore, I will claim normal depreciation of 15 crore. Okay. And on that I will get what? Additional depreciation of 20 crore. So in the first year itself, I will depreciate how much? 35 crore I can depreciate in the first year itself, which other assessees cannot. A trader cannot, a service sector like me cannot, a chartered accountant cannot, a lawyer cannot, a doctor cannot. They will only be eligible for 15%. But a manufacturer can get 35% in the first year itself. Sir, what shall I manufacture? Okay. The law very clearly say you should manufacture any article or thing. anything. The moment they say any article or anything, that's it. It crosses all borders. If I am engaged in manufacture of alcohol, will I be eligible? Tell me now, please. Yes, you will. Okay. There is no restriction or exclusion of items which you don't have to manufacture. Okay. Manufacture anything, any article or thing. Okay. If I am engaged in manufacturing of this bottle, will I be eligible? Yes, I will be. If I am engaged in the manufacturing of shirt, will I be eligible? Yes, I will be. Now, what happened long back in 2007? India is a country where if you go to very rural areas, there is a lot of issues with respect to electricity, correct? Powers. Now, when assessee is engaged in power generation, what? Now, that assessee is not getting additional depreciation because electricity cannot be called as a thing or article. Okay. What do I mean by a thing and article? Something which can be touched. Do you have the dare to touch electricity? Do you have the guts to touch electricity? Please tell me. No. It cannot be called as a article or thing. So later on in Finance Act 2007, the government extended this benefit of additional depreciation to power generation and power distribution assessees also. Okay. So now not only manufacturer but also power generation, power distribution assessees are also covered over here. Are you clear? Even if they buy what? A new plant and machinery, they will also be eligible for what? Additional depreciation of 20%. So who is the eligible assessee? Manufacturer and power generation and power distribution also, or if you are doing both of them. What shall they do? They should manufacture, and for that, for claiming depreciation, what they should do? They should purchase new plant and machinery, and one more condition the law says that they should use it. Okay. If you use only, then you will get it. Only purchasing is not sufficient to claim additional depreciation. You also have to use it. The way for normal depreciation, you have to use it. For additional depreciation also, you have to use it. Then you will get extra 20%. Whatever normal depreciation you get, that you will get extra 20%. Listen carefully, only in the first year. Okay. It's a one-time benefit. Okay. So from next year onwards, you are going to get only what? Only 15% normal depreciation on your remaining WDV. Okay. So this is not a perpetual benefit every year. Okay. Only once when you purchase the asset and put to use. The next year, if I buy another machinery, then again you can claim extra 20% on that machinery. The third year, again, if I buy a new machinery, again you can claim extra 20% on that machinery. For one machinery, you will get 20% once in a lifetime. Okay. Suppose I purchased the machinery on 15th of October 2025. And then I put to use. Okay. What happens to normal depreciation in this case? It becomes half. Correct. I will get normal depreciation how much? 7.5 crore. Correct. Now the question will arise, what will happen to additional depreciation? So that will also become half. So half means how much? 10 crore. Now the question will arise, what will happen to the balance 10 crore? Don't worry, that will be allowed in the immediately next year. Okay. So 25-26 you claim 10 crore and the next year you will get remaining 10 crore. Don't worry. Okay. It is not going to be lapsed. We will allow you in the next year. If you purchase and put to use the asset before 4th October, before what? Then you can claim entire 20% in the current year itself. Correct? Because 4th October is the cutoff date for us. Till 3rd October, full. From 4th October, half. So what all things I said you so far? Who is the eligible assessee? Manufacturer, power generator, power distribution, etc. What they have to purchase? New plant and machinery, and they have to put to use the new plant and machinery. They have to use the machinery, okay? Then they will get extra 20%. It's a one-time benefit on one asset, okay? There was a particular industry which went to CBDT and they started asking CBDT whether we will be eligible for depreciation or not. And that industry is an industry of printing. Which industry? Printing. So if you are engaged in printing business, okay, so whether you will be eligible for additional depreciation or not, the CBDT has said yes. But when, listen, if you are engaged in printing or if you are engaged in printing and publishing both, okay, first is only printing, publisher is somebody else, okay, you will be eligible for additional depreciation. Or if you print also and if you publish also, publisher is also you only in-house publication, okay, then you are eligible. It means if you are only engaged in publishing, then you will not be eligible for what? Additional depreciation. You need to do printing along with publishing, okay. Now there are certain assets, certain plant and machineries which the government has said that you will not be eligible for what? Additional depreciation. Which are those plant and machineries which are not eligible for additional depreciation? I am telling you one by one, try to by heart with me itself. First of all, second-hand plant and machinery. Which plant and machinery? Can I claim normal depreciation on second-hand plant and machinery? Yes, that nobody will restricts you. Okay, that you can claim. But you cannot claim additional depreciation on second-hand plant and machinery. That what if I have imported the second-hand plant and machinery from outside India? Even then it is not allowed. Okay. Don't make unnecessary argument that the imported second-hand plant and machinery from Germany is far better than India's first-hand machinery. Yes, that is true. I agree. Yes. Germans are known for what? Making machines, right? A second-hand Mercedes is better than Maruti or not? Please tell me. Tell me now, please. Yes, it is better. The machine is better at least. Okay. But a second hand is second hand for the purpose of this section. Even if it is brought from outside India, Germany, it has to be brand new. Only then it will be allowed. Is it clear? Second, I am telling you the exclusion. Make a count in your mind. Then we will read all of them from the book also. Ships are not eligible for additional depreciation. Aircrafts are not eligible for additional depreciation. Are you clear? Motor vehicles are not eligible for additional depreciation. Shall I go ahead? Any plant and machinery which is used in an office. Where? Which is used in a guest house. Where? Which is used in a residential accommodation. Where? Not eligible for additional depreciation. I have an office. I have a factory. Both. In the office, there is an air condition kept. Will I be eligible for additional depreciation? No. In the office, there is a computer kept. Will I be eligible for additional depreciation? No. In the factory, there is a computer kept. Will I be eligible for additional depreciation? The answer is yes. The objective is to use the machinery where? Inside the factory. Are you clear? Not in your office. And last but not least, which all items I have excluded so far? From the first, second-hand plant and machinery, ships, aircraft, motor vehicles, any plant and machinery kept where? Office, guest house, residential accommodation. Guest house and residential accommodation for your employees, correct? You are giving some refrigerator to employees, correct? You are giving some ACs to employees, correct? Not eligible for additional. You can claim normal depreciation, but you cannot claim additional depreciation. Last, exclusion last. Any plant and machinery on which you have claimed 100% deduction somewhere else. Let me give you an example. I am a scientific research assessee. I bought a plant and machinery. I already claim 100% deduction in scientific research section. Is it eligible? On that machinery, you cannot claim what? Additional depreciation. If you have already reduced your 100% cost somewhere else, you will not be eligible for dual benefits. Are you clear? Similarly, 35 AD, there are 14 businesses are there. If you have already claimed 100% deduction over there, you cannot claim additional depreciation on that machinery. Okay? One last thing I would like to say, then we will read it. There is a factory, and inside the factory, sometimes you might be knowing that there are some vehicles which run. Those vehicles are run within the factory only. Those are not run on road. I'll show you the photograph of those vehicles so that we remember that for a long time. Those are known as forklift trucks. What it is called as? Yes, such kind of vehicles run inside the factory for transportation of some material, etc., from one place to another. Okay. As per Motor Vehicle Act, such vehicles which are specifically designed to be run inside the factory are not considered to be vehicle only. Okay. Now, keeping this interpretation in your mind, are motor vehicle excluded from additional depreciation? Yes or no? But this is not considered to be motor vehicle. So will I be eligible for additional depreciation on forklift trucks? Please tell me. ICI has asked a question on this in exam once. Okay. That assessee is a manufacturer that has purchased forklift trucks. So will you claim depreciation on this? Please tell me. The answer is yes. Now come to the book, please. Page number 1.7 over here. Just ignore the last point that I have not said so far. That I will say once we are done with the SLM depreciation. Okay. Apart from that, all other points I have told you which are mentioned over here. Okay. Or leave that. There is no fun reading from that book. Okay. The real fun lies here. Okay. Leave that. You can revise from there at home. You have to use both the books. Now, this is the section which is there in front of you. The section which looks so easy when I explain. Now, read and let us interpret how deeply it is mentioned over here. Don't read anything beyond this. Just read till here. Pay attention on the board. I am also reading with you all. Just read till here. In case of any new machinery or plant, so the very first line tells us the machinery has to be new. Other than ship and aircraft, the ships and aircraft are very at the beginning only they have excluded. Okay. Which has been acquired and installed by an assessee. Engage in the business of manufacturing or production of any article or thing, or in the business of generation, transmission, or distribution of power. A further sum equal to 20% of actual cost of such machinery or plant shall be allowed as deduction under section 32, subsection 1, clause 2. If you want, you can read it once more, whatever I have highlighted. Then I have some questions to you. Whatever you need to understand academically, that we have done. First of all, I have a question to all of you. Don't read ahead. Even if you read ahead, it doesn't matter. You will not get the answer. Okay. My first question to all of you. To claim additional depreciation, am I supposed to use the new plant and machinery? Don't answer based on what I told you 10 minutes back. Okay. Answer based on what is written on the board. Is it necessary to use? No? Tell me. No? It is nowhere mentioned in this bare act. This is the act, huh? You will trust more what? My color book or bare act? Obviously bare act. Why will we trust you, sir? Who are you? We will trust more to the finance minister, correct? Obviously, you should trust this more. Correct. Wait. Don't make any judgments. Don't make any conclusions, please. Wait. Sure, it is not written over here that you have to use it. Not written? Sure. What if I say it is written? It is written in this paragraph. Somewhere it is written. Yeah. Engage in manufacturing does not mean that you have to use it. Production does not mean you have to use it. I am just trying to develop the skill of interpretation within you. You are the future of this country. If after becoming a chartered accountant, you don't know how to read the law, yaar, it will be very bad, na? Correct or not? You should know now how to read a law, correct? That will make you a good practitioner. Yes, please. Somebody was saying. Excellent. Can you further elaborate on the sentence? This is over and above 15%. That's what you are trying to say? No, your answer is not completely correct. Yes, please complete. Please don't talk, please. Yeah, this is further. I agree. What did he say? Did you understand? He's saying that this is further 20%, correct? It means you would have claimed 15 first. So for claiming 15, you would have used the asset. So he is making a correct interpretation. But he is going very deep into inside the provision, correct? It is very clearly written on the board. It is more clear than what he interpreted. Read the last 3 lines. I will give you the hint. The additional depreciation is also allowed under section 32 subsection 1 clause 2. What is section 32 subsection 1 clause 2? The section of normal depreciation, correct? In that section, is it necessary to use? Are yes or no? So one more thing will come. Is it necessary to be the owner of the asset to claim additional depreciation? Yes, because that is also mentioned in 32 subsection 1 clause 2. Are you clear? This is not a separate section. That additional depreciation is also allowed in the previous section only. This section only tells you some extra conditions to claim that. Did you understand what I said? So to claim additional depreciation, you have to use the asset, correct? If using is not important, if using would have been not important, the government would have not put this particular provision below. Read this bold paragraph. That balance 50% will be allowed in the next year, correct? If using would have not been important to claim additional depreciation, they would have not said this, na? So my color book is correct. Okay. The bare act is also correct at its place. Yes. On the day of examination, you don't have so much time to interpret and all. You will directly read purchase, use, claim. Correct? For recapping, that is sufficient. Okay. So what is written in this bold paragraph? If you put to use the asset for less than, then the balance will be allowed in the next year. Okay. Now, I have another question to all of you. See on the board, please. You have to think and answer. Please think a lot, take your time and then answer. This is Reliance Industry Limited. Okay. Engaged in manufacturing of natural gas. Okay. You have to read this much. Forget about what I have told you from the color book 10 minutes back. Okay. Color book is a result of subsequent amendments. That is the current position today. Okay. But how we reach that there, that is what I'm trying to explain you. I am a company, Reliance Industry Limited. I'm directly taking the name of the company. It is engaged in the manufacturing of natural gas. Okay. Now, Reliance is purchasing a new car of 10 crore rupees. And it is also using this car. Okay. Understood the question? Read this paragraph. Okay. How people used to interpret this paragraph, I want to check how you will interpret. Read this paragraph. I don't want an answer, any answer for the next 1 minute at least. Whether it will be eligible for additional depreciation. Please don't say yes or no. Please read once. Read? Eligible? No? So it is very clearly written that the car should be used for manufacturing. My counter question to all of you. Is there anywhere written in this entire paragraph the car should be used in manufacturing? Then why did you say that it is not eligible for additional depreciation? What? Natural gas is also a product. Why not? It is an article or thing? No? No, it is not like power. Chalo, you have an issue with that, so I will just change to oil. Okay. I will change to what? Oil. Let's not debate whether natural gas is an article or thing or not. Okay. Now, again, read it for 1 minute and answer. Oil you can touch or not? Please. Let's assume it's an oil, or let's assume it is any other product. It's apparel, it's phone, it's camera, anything which is tangible in nature. Will it be eligible? Tell me. Will it be eligible? No? Why no? So what? I am extracting and then manufacturing also in the factory producing. In oil industry, there are 3 processes. One is prospecting, extraction, and then producing. I am producing also. Don't think about the product. Tell me whether car will be eligible or not. That is my question. Okay. My question is not on the activity which the assessee is doing. Assume whatever he is doing is manufacturing. Okay. Tell me whether car is coming in this box or not. Yes or no? Not coming? Now you tell me. I am reading one by one. In case of a new plant and machinery, can I call the car as new plant and machinery? Is it other than ship and aircraft? Have I acquired it? There is no question of installation. Car cannot be installed. Okay. Am I an assessee? Am I engaged in the business of manufacture or production of any article or thing? Then why the hell you are not giving me the depreciation, please? If you are saying yes for each and every condition. See the point I am trying to say, listen. It is nowhere written in the section that the car should be used for the purpose of what? Manufacturing. It is only written the assessee should be engaged in manufacturing. Check. Are you able to understand or not? Is Reliance engaged in manufacturing? It is nowhere. The relationship of car should be in the factory. It is nowhere written. Check. Are you clear? The assessee should be what? Engaged in manufacturing. Okay. So people used to buy car and claim additional depreciation. Okay. People used to buy office equipment and claim what? Additional depreciation. They used to say office equipment is a new plant and machinery. Correct? It is not ship and aircraft. It is acquired, installed and put to use. Assessee is engaged in what? It is nowhere written in the main section that the for the purpose of manufacturing, the machinery should be, tell me now please, it should be actually used for the purpose of manufacturing. That is not mentioned in the section. Check please. So people used to claim additional depreciation on such assets also. So then the government came up with a proviso. Check. The exclusion which I told you now, that came later on. Are you clear? First excludes what? Second-hand machinery. Second, office premise, residential accommodation, guest house. Third, any office appliance or road transport vehicle, which will not include forklift trucks. Okay. And fourth, any machinery or plant whose the whole deduction you have already claimed. Correct? Is it clear? Okay. So this is where we stand. And then there is a circular. You can read this circular also, which I have told you that printing and publishing, if you are engaged in these two activities, you are eligible to claim what? Additional depreciation. Okay. Check it, please. The circular is issued by CBDT in 2015-16. So that the assessee can take the advantage of this section. It is the duty of the CBDT to give what? To give reliefs to the assessee. Okay. It is the duty of the CBDT to come forward and clarify the things in case of any doubt. Correct? CBDT give us relief or not of extension of due date by 1 day? Tell me. Yes or no? They have given this time relief, 1 day extension. 1 day also is only. Read? So this is where we stand as far as depreciation is considered. So I will ask you a few questions now to sum up what we have done so far in the last lecture and now till here. Then we will take a break so that you can have a breakfast first. Then we will continue the session after the break. But before that, we will consolidate whatever we have done so far in depreciation at least. I will ask you the questions now randomly from between. Okay. Shall I? That would be better for you to remember the things over a long period of time. So randomly, I will ask you whatever we have done so far. Computer peripherals are depreciable at what rate? 40%. Printer scanners, 40%. EPBX, 15%. Mobile phones, chips, 20%. Randomly, I will ask you any doubt, please. If you are making a mistake, that is good. You will rectify here itself. I am engaged in manufacturing. Okay. And of any article or thing, and I bought a new windmill. What I bought? New windmill. Okay. Will I get normal depreciation? How much? No, windmill is subject to how much depreciation? Tell me. How much? 40%. Will I get additional depreciation? Louder. Yes. Whatever items are excluded in additional depreciation, except that you can claim on any plant and machinery. Correct? So windmill is also subject to 40% plus 20% additional. Are you clear? Okay. I acquired an asset in previous year 25-26, but I did not put to use. I put to use in the next year for just 15 days. In the next year on 17th of March next year. This year I will obviously not get depreciation. Next year I will get how much depreciation? Full depreciation. The condition of 50% is only applicable to the year of purchase, not to subsequent years. Okay, these are small issues which I am asking you, which will directly come in exam. These are all exam points. Whenever we will be doing questions, you will see all these points over there. Next is, to claim depreciation, one of the condition, you need to be the owner of the asset. Owner means beneficial owner. Where it is written beneficial owner? Huh? Supreme Court judgment. What is the name of that judgment? We will try at least to remember. Okay. Then if we forget, that's okay. But at least we will try. We'll make an effort at least. It was held in the Supreme Court case of Mysore Minerals Limited. In case of lease transaction, don't confirm, madam. It is correct. Okay. In case of lease transaction, who will claim? Lesser. By default, nothing is mentioned. Give it to lesser. In case of hire purchase, hire purchaser, nothing is mentioned. Give it to hire purchaser. Okay. Don't forget that case of ICDS Limited, where you are engaged in the business of what? Leasing vehicle on a long-term basis. Okay. Then comes, what does block means? Same category of asset with same rate also should be same. Okay. With same rate of depreciation. Then comes, I don't want to claim depreciation. Can I say this? Is it mandatory? Yes, it is mandatory to claim depreciation. It is not your choice. If you are using an asset for business, you have to claim it. Okay. Or else don't show that asset in the balance sheet. Okay. Don't show in the balance sheet. Don't say that I'm using it. Correct? If it is there in the balance sheet, the income tax department will ask for the depreciation. Because at the time of sale, they want more tax. Okay. Then, additional depreciation, is it available to traders, service providers? Is there any condition in additional depreciation that you should increase your capacity of the production by 10%? They will put such hopeless things in the paper. Okay. You need to be very clear with the provision that there is no such condition that you have to increase the production, you have to increase the capacity. Nothing like that is there in the law. Are you clear? Then comes, what if I purchase a motor vehicle on 15th of December 2020? How much depreciation will I get? Extra 15? Second time you are making a mistake. Last lecture also I asked you the same thing. That extra 15% is available when? 23rd July 2000, 23rd August 2019 to 31st March 2020. What they will do in exam, they will give you the opening WDV of a machinery, of a car. On which date? On 1/4/2025. They will tell you a car opening WDV 1/4/2025 is 10 lakh. They will put in the bracket. This car was purchased on 15 December 2019. Okay. So what will you do in that case? you will claim 30% depreciation. Are you clear? They will put such kind of things in the paper. Okay. You need to be very careful with some dates at least. There are few dates which are very much relevant in exams. Will I be eligible to claim depreciation on patent, copyright, trademark, license, goodwill? No. From 2020 onwards, no. You are not supposed to remember from when. Today it is not available. That is more than sufficient. Okay. I am just saying for the sake of your information. If you have any doubts till here, you let me know. Is there any doubt you have till here? No? Sure. Everything is there in your mind. I want you to remember the things and go, not just listen and understand. Remember, you have to buy hard in the class itself. In the next 40 days, you have to, at the end of the 40th day, you should be done with your direct tax. After going to the hostel also or home also, wherever you are staying, if you are listening to the recording lectures, make sure that you complete with me only. It's a very big subject. If you are done with direct tax with me, believe me, you are done with group 2. Because in what is left in group 2 then? Only IDT, which is half of direct tax. Okay. And IBS is something which you are not going to separately do as a coaching, correct? So your more than 50% of the group 2 is DT only. So you have to make sure that you complete with me only. Okay. Pay attention, please. Let's go to the next part of depreciation, and that is, pay attention, please, here. We all know that in section 32, subsection 1, clause 2, coming back to our normal depreciation now once again. Additional depreciation was a small part which we have to discuss, which we have done. Now in normal depreciation, we all know that the depreciation is allowed on WDV of block. So what do I mean by the term WDV? We need to understand this term now. The term WDV is defined in section 43(6). Again, it is not a definition which is given in section 2. It is given in between a chapter. So this definition is applicable to this chapter, okay, not to the entire act. So what is WDV, sir? The definition of WDV is as follows. WDV of an asset is equal to actual cost of an asset as reduced by depreciation actually allowed. So this is the same definition which we are aware of in accounting also. We do the same thing to compute WDV. You take the cost of the asset, from that you will remove the depreciation, and whatever is left, that is called as WDV. Okay. But they are using one term over here, that is actually allowed. What do I mean by actually allowed? Actually allowed means that depreciation which has helped us, I'll just write down, to save tax. See what we do with respect to income tax depreciation while computing the business and profession income. We take the accounting depreciation, we add back that, correct? And whatever is the depreciation as per income tax law, that we what? Reduce. So the depreciation which we are reducing, is it saving our tax? Please tell me. Yes. So that is actually allowed to you. Whatever depreciation is helping you to save tax, that should be reduced from the WDV. Is additional depreciation also helping you to save tax? That should also be reduced from the WDV. Okay. And that is the reason you can check in your color book also. It was written also over there that the additional depreciation will also be reduced from the block of asset. Okay. To arrive at WDV. You can see on the board if you want point number 3. Is it clear? Coming back to the discussion of what is actually allowed. Any depreciation, whether normal depreciation or additional depreciation, if that is helping us to save tax, that is reducing our PGBP income, okay, that is actually allowed. And if it is actually allowed, you have to reduce it from the what? Cost of your asset so that you arrive at your WDV, okay. So this is a very simple definition, nothing great as such. Now there is one issue which I am addressing in front of you. Please try to understand this issue. It's a very beautiful issue. Please give your opinion. What do you feel about this issue which I am putting on the board now? There was an assessee in 2009. The name of the assessee is Doom Duma India Limited. The assessee was engaged in growing and manufacturing tea in India. This was the nature of business of the assessee, okay. So assessee has its own farm where they grow the tea, then they pluck the tea leaves, send to factory, process it, and make what? Tea pouches or tea in the form of a, they can sell it in the bottles also, in the form of pouches also, and then they are selling it, okay. This is the nature of business of the assessee. So the assessee is engaged in composite activity of growing as well as manufacturing, okay. From that, the assessee earned some composite income, say of 3,000 lakhs from growing plus manufacturing tea in India, okay. Now this 3,000 lakhs is before depreciation. We have not reduced depreciation. We have done everything except depreciation. So now I am going to reduce depreciation from this as per income tax law. Less depreciation under section 32. The assessee has purchased some assets of 1,000 lakhs. The actual cost of the asset which is purchased by the assessee is 1,000 lakhs. This is some kind of plant and machinery. So on this, assessee will claim how much depreciation? 15% depreciation as per income tax law. So this will come to 150 lakhs. So the net income after depreciation is 2850. This is the composite income after the depreciation as per section 32 of the Income Tax Act. Now we need to find out what is the taxable income of the assessee. That is the amount on which the assessee is going to pay tax. For that purpose, we need to go back to CA Inter and to just recap few things, which we will learn also in CA Final in detail later on. But this is something which every CA student knows. You might have learned in CA Inter that if an assessee is engaged in growing and manufacturing tea, coffee, rubber, remember? Then you have to segregate the income into taxable income and exempt income, remember? Yes. So by any chance, do you remember that how much is taxable out of this and how much is exempt out of this? 40-60. Yes. 40% is taxable and 60% is exempt. There were separate rules for that. Okay. And that was applicable to 3 products: tea, coffee, and rubber. Correct? Even in CA Final, in the chapter of PGBP, only in the next 2-3 days, we are going to see all those rules for tea, coffee, rubber. All 3 of them are there in your books also. But as of now, I am segregating them into 2 parts. Taxable, 40%. Exempt, 60%. 60% is considered to be agriculture income. Just somebody compute and tell me how much it comes to. 1140, and this comes to 1710. Okay. This comes to 1710. Now this portion is fully exempt, no need to pay any tax, no tax. On this portion, you will pay your applicable tax, whatever is your tax rate, 20%, 25, 30, whatever it is. Okay. So the things are looking very simple. What is the issue in this? Why this matter went to Supreme Court? Listen. This is the Supreme Court judgment which came in 2009. Now the time has come to compute the WDV of the asset. Okay. What is WDV? Just 5 minutes back I have told you. Actual cost minus depreciation actually allowed to the assessee. Now what do I mean by actually allowed to assessee? That depreciation which is helping the assessee to save the tax, correct? Now I am finding out the WDV of the asset on the board. WDV is nothing but actual cost 1000 lakhs, correct? Minus depreciation actually allowed. Now just wait. Okay, just wait. How much depreciation we are reducing from the composite income? 150 lakhs. Okay. Now this is mathematics now. You need to understand the maths over here. The assessee is saying that 150 lakh is not helping to save my tax. Okay. The assessee is saying that everything is segregated into 40, 60. Correct? So only 40% of 150 lakh rupees of depreciation is helping to save my tax. Are you able to understand this or not? Okay. Some of you might not understand. That's all okay. So what we will do to understand in a very simpler manner, we will segregate this 40, 60 from the top itself. Okay. From the top. If I segregate 40, 60 from the very top, how much will be taxable? How much will be exempt from starting? 1200 and 1800? Yes or no? So 150 will also be segregated into 60, 90. So from 1200 you will reduce how much? 60. Okay. And from 1800 you will remove how much? 90. You will come to the same numbers. Tell me. Is it clear? So out of 150 rupees depreciation, how much is saving your tax? Only 60 rupees, correct? So the assessee is saying the definition of WDV is actual cost minus depreciation. You should only reduce how much? 60 from here, and my WDV in the next year should be on a higher side. That is 940 lakhs. Are you clear? It should not be 1000 minus 150. Are you clear? Why does the assessee saying so? So that he should claim higher depreciation in the next year on 940 rupees. Are you clear? So the government came up with an amendment. Okay. To override this judgment. Court also said the same thing. That whatever is actually allowed is actually allowed. You have only made the definition, correct? Actual cost minus depreciation actually is not 150. It is only 60. Actually is not 100% of the depreciation. It is only the 40% portion of 100. Correct? So the court said in the favor of the assessee, and assessee won the case, and assessee got the depreciation on 940. Next year, the WDV, opening WDV will be how much? 940. The department did not like this. They brought an amendment in the form of an explanation below the section. What amendment they brought? Let me show you. This entire example is there in your book also on page number 2.9. Can you see this? You may not write this, okay? This example entirely is there. And the government made this amendment in 2009. They put an explanation below the definition of WDV. Where is definition of WDV? 43.6. Below that, they put one explanation. Okay. Shall I read this? Explanation 7 provides that In case of a composite income, for the purpose of computing WDV of an asset acquired before the previous year, the total amount of depreciation shall be computed as if the entire composite income is chargeable under PGBP. So now you have to assume that entire income is chargeable under what? PGBP. So and assume that there is nothing like agriculture income over here. Just assume entire 3000 is what? PGBP. If entire 3000 is PGBP, tell me entire depreciation should also be reduced from yours. Tell me please. And you have to show 850 lakhs as your what? WDV. Read the paragraph ahead. And the depreciation so computed shall be deemed to have been actually allowed. Is it really allowed to you? Please tell me. Is that 90 rupees allowed to you? No, but the law is putting a deeming fiction over here. Something which is not allowed, the law is saying it is deemed to be allowed in your favor. And you reduce the entire 150 lakhs from the block of asset. Okay. So after the amendment, what is going to happen? After the amendment, the government is not going to accept your 940 lakh as WDV for next year. So after this explanation, they will take your WDV for the next year as how much? Please tell me. 850 lakhs. So what is the moral of the story of this particular example and this amendment? The moral of the story is very simple. That even if you are doing partially taxable business and partially exempt business, while computing the WDV, you have to reduce your full depreciation. Are you clear? Please tell me. While computing the depreciation, you don't have to segregate into 40-60 or 35-65 or 25-75. For tea, coffee, rubber, there are different percentages. Okay, you might be knowing it. And if you don't know, we will see in the next chapter in the PGB. So just go through this example. This judgment is nullified by the court now, by the government now in Finance Act 2009. They have overridden this judgment. So such small amendments, can you understand? These are nothing but increasing what? The tax base of the, rather than increasing what? The rates of the tax. Because of this amendment, the depreciation in the next year will fall, correct? Because of that, the business income will increase. And because of that, the tax rate will also increase. Not only the depreciation will fall, because the WDV is reducing now, correct? When you sell, the capital gains will also be more, correct? There will be double impact on the SSE, okay? Because of reduction in the WDV, that will not only reduce your depreciation, but will also increase your capital gains whenever you will sell it, okay? So there will be double impact on the SSE's income. So just go through it, then we will go ahead with the next part. Shall I go ahead? Now, the next part is the biggest part of depreciation, which will go for a very long period of time. Probably by the end of today's session, we are going to discuss the next part only. The next part comes out of this line only, which is given on the board. The depreciation is allowed on WDV basis, correct? But the concept of WDV arises in second year, correct? In first year, what is WDV? The cost itself is WDV, correct? So the next question will be, what is the definition of actual cost? Okay. So the term actual cost is defined under section 43.1. Pay attention on the board. So there is one definition, there are some provisos below the definition, and there are 13 explanations below it. How many? 13. Okay. For your kind information, all 13 were there in CA Inter also. Okay. But nobody pays attention in CA Inter in all those things in detailing. In detail, we don't pay attention much. Even when I teach to CA Inter students, I don't speak so much in detail because that is not required at that time. So there is a section in which there are some lines, some provisions are there. Below that, there are some provisos. I hope you you know the meaning of provisos. What is a proviso? It's an exception to the law. Okay. So there are multiple provisos in a section. In some sections, there are one proviso. In some sections, there are two. In some, there are three. In some of the provisions in the income tax law, there are 23 provisos. It means one provision. For that, there are 23 exceptions. So proviso is nothing but exception. Whenever you will read a law, you will find out such words which I am going to say now. Provided that, the moment these words will come, understand this is a proviso. The moment it is written provided that, you understand this is a first proviso to the section. When it is written provided further that, it means this is second proviso to the section. When it is written provided also that, then it means it is third proviso to that same section, third exception. So the law creates exception within the section. For example, if we want to make one provision in the classroom. So from tomorrow onwards, nobody is going to come late. That is after 7 a.m. Okay. I don't like it. Suppose this is the provision. Suppose, example. Now, I can create exception to this first proviso. Provided that a student can come late if he is unwell. Okay. This is an exception. If he is not well, he is at liberty to come late. Second proviso, a student can come late. Provided further that a student can come late if there is lots of rain, etc. outside. Okay. So I'm creating another exception. Like that, I can create multiple exceptions. So whenever there is a first exception in the law, it will start with the word provided that. Second, provided further that. Third, also that. And from fourth onwards, it will be same only. The grammar has ended now. Okay. Now there is no other term also. After also, I don't know. Even government does not know what has to be written from the fourth. So from fourth to 100th proviso, whatever it is, it will be provided also that only. Okay. So in the new income tax law, the government, one of the important areas where the government has worked in the new income tax law, that they have been successful to remove all the provisos from the income tax law. Okay. So in the new income tax law, there is no concept of proviso. If there is anything which has to be written in the proviso, that will be in second subsection, third subsection, fourth subsection. Okay. There is no concept of proviso in the new income tax law. They have removed that. They don't want to create unnecessary doubt in the assessee's mind that one section is there. There are 23 exceptions. People are confused with that. Okay. So whatever is there in the proviso, the law is there, but that is there in the form of separate sections. Okay. So that is one thing that they have achieved in the new income tax law. And that is the reason in the new income tax law, there are 536 sections. In the existing income tax law, there are 298. Still, the new income tax law is half of the old income tax law. Okay. Why? Because these provisos are converted into what? Into sections. That is the reason you will find that there are more sections, but the content is not more. The content has been what? It has been reduced. Okay. Anyways, coming to the discussion, what is actual cost, sir? In the first year, whenever you will buy an asset, you will put that asset in the block, correct? So that asset will ask us at what value I should enter the block, correct? That value is called as what? Actual cost. If I buy building, plant, machinery, furniture or intangible asset, in the first year I have to enter the asset in the block at some value, na? Yes, that value is actual cost. So what is the definition of actual cost? It is defined in 43(1). I am writing the definition. Actual cost means actual cost of an asset. It's a very strange kind of definition. Somebody ask your name. What's your name? Huh? Arun Kumar. What is the name, meaning of Arun? Arun will say Arun means Arun. Yes or no? Is this the way the government is defining the term actual cost? Please tell me. Yes. There is something inside this. Let me write down and then I will speak. Actual cost means actual cost of an asset to the assessee as reduced by that portion which is met by any person or authority. So this is the simple definition which is given in the law, in the Bare Act in section 43(1). The provisos I will speak after some time once we are done with this particular part first. The government is writing the term actual cost of an asset means actual cost. They could have written that actual cost means the price of the asset, correct? But they are not using the word price. They are using the word cost. They are saying the actual cost of an asset on which you are going to claim depreciation is nothing but the cost of the asset. Now, what do I mean by this? The term cost is very wider as compared to the word what? Price. For example, sir, what is the actual cost of this television? First, I will tell you what is the price of the television. Sir, what is the price of this television? Suppose I went to the shopping mall or I went to Amazon and I saw the price of the television is say 50,000 rupees. Okay. So 50,000 is the price of the television. But the law is not putting emphasis on price. The law is putting emphasis on cost. Sir, what is the cost of this television? The cost of the television means I should include all those expenses in the television which are necessary to put this television into working condition for my business and profession. So the price of the television in the shopping mall or in the electronic store, it is 50,000. But when I went over there and I asked them, will you deliver? They said, no, we don't deliver. You have to carry yourself. So there is a transportation cost to bring that to my classroom, correct? Suppose that was 2,000 rupees. Okay. I have to add that also to the cost of my asset. Now, then I asked them, will you install that in my classroom? They said, we are not going to do that. That is your job. So I bought an electrician. I connected the power, correct? I put some support behind so that it can hang over there. So there was an extra cost of 2,000-3,000 rupees that also. Okay. So if somebody asks me today also, what is the price of this television? I will say 50,000. But if somebody asks me what is the cost of this television to put the television into working condition, I will say it is 55,000 rupees or 54,000 rupees, whatever it is. Therefore, the word cost will include all those expenses which are necessary to put the asset into what? Working condition. This is the same thing you do in the accounting standard also, correct? In accounts also, what does account says? You will capitalize all the expenses which are necessary to put the asset into working condition to the cost of asset, correct? And then you will claim depreciation. Even the Income tax law says the same thing. Even the ICDS on tangible fixed asset says the same thing. ICDS is there on this particular actual cost on tangible asset, which says any expenditure which is necessary to put the asset into working condition, capitalize, add to the cost of asset. Any expenditure which are not related to fixed asset, just go to the P&L and claim what? As a revenue expense. Okay. So this is the meaning of the term actual cost. Okay. So you have to consider all the expenses which are necessary to put the asset into working condition. First thing. Second, the second part of the definition says that the actual cost should be reduced by some portion, which is met by any person or authority. Now you can give me an example on this. Can you? Yes, if some subsidy, etc., is given by some government or some other authority, correct? What you are supposed to do? You have to reduce from the cost of asset because that much you have not borne from your pocket, correct? So why the hell you will claim depreciation on that much portion which you have not taken out or you have paid out of your pocket? Okay. So if the cost of the asset is 100 crore and if the government has given you 20 crore what? Subsidy. Then you should capitalize the asset in the block of asset at how much? At 80 crore rupees. Okay. So this is the first thing that you have to keep it in your mind when you read the definition of actual cost. The second thing, pay attention please. It's a long discussion. It will go on for hours and hours and hours. There are some provisos as I have told you below this. What does the proviso says? The proviso says the following thing. I want you all to read from here. This. You are very familiar with this sentence, which is on page number 1.7. You are familiar with this sentence from CA Inter. You are familiar with this sentence in your office also when you have done your articleship. Obviously, if you are not familiar, don't worry, I am going to explain. But I think so every CA student should know this sentence. Yes? If you pay more than 10,000 rupees to a person in a day, correct? Then you should pay by which modes? Other than cash. This is a very general sentence that you have said me. Okay. Please, henceforth, we are not going to use this word which you have used. Okay. Other than cash. Please read properly what is written on the board. This is where your exam will twist you. My duty is to tell you what the law says, not what generally you can say in day-to-day life. No, you have to be very specific with the provision. We are learning a law. So if you purchase an asset and if you make a payment to a person in a day, otherwise then there are 4 modes mentioned by the law. Which is the first mode? Account pay check. So account pay check will be allowed or it will not be allowed? It is allowed. You should not pay other than this, correct? Second, account pay draft, that is allowed. Third is, what does ECS stands for? Electronic clearing system. Okay. And the fourth is such other prescribed mode. Prescribe means there has to be some rules which the government would have prescribed. Okay, I will show you which modes are prescribed. Shall I orally say right now, as of now at least? I'll show you the prescribed rules also after some time. The prescribed modes includes your UPI, debit card. You may not write, it is there in your book. Okay, I'll show you. It includes UPI, debit card, credit card, net banking, okay, RTGS, NEFT, IMPS. Is it clear? These are different kinds of online modes of transfer. Okay, all of them are covered. But we have an habit of saying other than cash. It is absolutely wrong, please. Let's see how. You cannot say this henceforth. Till now you have said it's okay. Henceforth, you cannot. I will ask you one question then. See on the board, please, all of you. Suppose this is a check. Here there is a date which is written. Okay. Here it is written or bearer. Correct? Here you will write the name of the party. Correct? Here you will write the amount in letters. Okay? In figures, sorry. And here you will write the amount in words. Correct? And here you will sign. Okay. So if I pay this particular check, say 25,000 rupees to a person. Okay. The check is the way you are seeing on the board. This is the check. Is this allowed? Tell me. What kind of check is this? This is the not allowed. If I want to pay more than 10,000 rupees, not allowed. Sure. Not allowed. Absolutely correct. Okay. You need to pay by what? Account pay check, account pay draft, ECS, such other prescribed mode. I'll show you the exact list of the prescribed mode. Okay. Which includes UPI, etc., which I told you. IMPS, RTGS, NEFT, internet banking, credit card, debit card. Okay. So I'm making some changes in this. I'm ready. I'm striking off this bearer over here. Okay. I'm putting a cross over here. Okay. Now I'm giving you this check. Is this allowed? Louder. And the answer is no. Listen carefully. Listen. That's the reason you have come over here to learn. Okay. It is not allowed. This is called as a mere cross check. What it is called as? Cross check not allowed. In the exam, they will put this sentence only. The SSC has paid 22,000 rupees by a cross check. Disallow. Not allowed. What is the law saying? It has to be written over here what? Account pay. Till the time this is not written over there, it is not a valid check about 10,000 rupees. Are you clear? The payment will be cleared in the bank. I am not saying the bank will not accept. The bank will accept. Who will not accept? Income tax department will not give you depreciation. Are you clear? Sure? So don't say other than. If you want to say other than cash, other than bearer check, other than cross check. Then it is correct. I will accept that. Okay. Henceforth, say other than cash, other than bearer check, other than cross check. Account pay word has to be written in the paper. If account pay is not written, then above 10,000 it will not be allowed. Below 10,000, do whatever you want to do. So coming back to this paragraph once again, there are a lot of things to discuss over here in this paragraph. Okay. Now, few simple things that I would like to discuss that everybody knows, but still it is my duty to address each and everything. And even if it is simple, I have to get a confirmation from you all. And the question that I'm asking to you all is, suppose if I pay 8,000 to him today in cash and 7,000 to her in cash, will that be allowed? Louder. Yes, the limit of 10,000 is per person in a day. Okay. So that is allowed. There is nothing wrong in that. Second question. If I pay 8,000 to him in cash today and tomorrow to the same person, I am again paying 7,000 in cash. Is that allowed? That is also allowed. The limit is per person per day. Okay. To one person you can pay in one day not more than 10,000 in cash. What about exact 10,000 if I pay? All things we need to address. Every small minute detailing has to be. I will not allow you to have any doubts in your mind. Okay. You will not be asking much doubts to me, that I am very sure. Okay. If you are asking, that is very good. I'll be very happy to address your doubts. But I will try from my side that all the doubts that can come to a student's mind, that I will address from my side only. Some of the doubts might not come also to your mind, correct? It might come after 3-4 months. So we should clarify in the class itself. So exact 10,000 is allowed? Yes, it should exceed 10,000. Then only disallowance will attract, correct? Please read the paragraph once again, and especially the last line. Have you read? Now, please answer this question. I am buying a computer of 1 lakh rupees. This is the actual cost of the computer. Okay. I bought this on 15th of December 2025. Now, on 16th December 2025, I am making 10,000 payment in cash. Like that, I am manipulating the law, and for the next 10 days, every day I am going to pay you 10,000 cash. Okay. Is it clear? I am not paying you 1 lakh together. Okay. I am paying you every day 10,000 cash. What will be the actual cost of this asset? Did you understand the question? Please. Question is understood, correct? Now think. What will be the actual cost of this asset? Tell me na. 1 lakh? Absolutely. Why 0? Who said 0? I want the justification if you are saying 0. Yes, please. It is not written anywhere in those 4 lines. Okay. The 4 line is the law. Aggregate what? Aggregate in a day it is mentioned. Okay. Not aggregate in multiple days. Yes or no? Please say. Single transaction is not relevant over here. Anywhere mentioned over here? Single transaction? No. Nowhere mentioned over there. I understood. But the criteria for disallowance in PGBP is what? In a day to a person. That's it. With respect to how many transactions, that is not covered over there. Tell me, will I get the depreciation on 1 lakh rupees? Say na, there are ways to manipulate tax. Na, manipulate na, then why are you worrying about it? Tell me whether it will be allowed or not. Yes, it will be absolutely allowed. Read the provision carefully. If the payment exceeds 10,000 to a person in a day in cash or in bearer check or in cross check, then such expenditure shall not part of actual cost. In the next 10 days, are we violating this provision? Tell me. You can claim 1 lakh rupees. Okay. You can take 1 lakh in your actual cost and you can claim depreciation. Okay. Next example. Pay attention on the board. I bought this asset for 1 lakh rupees. Suppose this is not a computer. It is some plant and machinery, some other plant and machinery which needs to be installed. Okay. So 1 lakh rupees I paid by account pay check on the same day. Okay. And on the same day on 15th of December 2025, 12,000 I paid in cash for what? For installation. So what will be the actual cost of the asset for me? It will be 1 lakh. You have to ignore this expenditure. Okay. The law does not say that if your cash payment exceeds 10,000, then you will not get depreciation on any amount. It is not saying that. Whatever portion of payment is exceeding what? 10,000 in cash. That much will be ignored for the purpose of actual cost. It means whatever is paid as per the law. Are you clear? That much will be eligible for the depreciation. Just because one transaction of the asset is subject to cash payment. It does not mean that you will lose depreciation on 1 lakh also. Are you clear? Even if you want to purchase an asset in cash, okay, what shall you do? Make daily payments, okay? But that you can do for which asset? Small payment asset. Now, for 30 crore asset, can you do that? Tell me please. You cannot do that, correct? You can do that for an asset of 1 lakh or 2 lakh rupees or 3 lakh rupees, correct? You cannot do that for the assets which are worth what? Crores of rupees, okay? I hope it is clear to all of you. There are some examples over here. I want you all to check these examples along with me and tell me what will be the actual cost. Page number 2.10, 2.11, illustration 1. These examples will further strengthen our concept, that's it, okay? An assessee purchases plant and machinery of 4 lakh on 1/1/2026 and pays 4 lakh by cash. What will happen? Tell me. What will be the actual cost of this asset? It will be 0 rupees. Okay. Since the payment of 4 lakh is made by cash, it shall not be considered as part of actual cost of plant and machinery. The actual cost of plant and machinery shall be taken as nil, and nil shall be added to the WDV of the block of asset. Okay. Now you will ask me one question. What is the use of adding what? What is the use of adding nil to the block of asset? Correct? Yes or no? Quantity you have to add or not? Value you will add 0. Correct? Now what will happen because of that? Depreciation, so anyways you have gone. One more thing you will lose. Tell me what? Whenever this quantity will be sold in future, full selling price will become your capital gains. Are you clear or not? So purchasing asset in cash will have two impact. You will lose depreciation also, and at the same time, capital gains will also be fully charged. Are you clear? So the law is very intelligent. The law is not saying, listen carefully, if you purchase in cash, then you should not add the asset only to the cost. They are not saying that. They are saying, don't add to the amount column. Are you clear? Quantity column you have to add. Are you clear? Now one more thing. I'm not reading ahead. Just if you have practically done this, you let me know, or else we will keep this discussion on hold. I am purchasing a machinery of 4 lakh in cash from you. Correct? I paid you 4 lakh in cash. Is there some provision in income tax law which prohibit you to accept 4 lakh in cash? Yes, there is a provision. Yes. So I am saying that we have not done that provision so far. Correct? But you would have done in your office somewhere, etc. You have seen. Okay, you cannot accept 2 lakh or more in cash. Correct? So that is also mentioned below. We will see that later on. Okay? Check it once if you want. Is it clear? The seller also cannot accept what? 2 lakh or more. Exact 2 lakh is also not allowed in cash. If he accept, he will be liable for penalty. You also have to report that in the tax audit report. Yes? 269 ST. We will check that section later on. Okay? Now one more asset we are purchasing. Suppose this same asset. Now we are not a fool to make the payment in cash on one day. We will split the payment. Tell me. First you paid 5,000 rupees cash 10 times on the same day. So you are a bigger fool now. Correct? Will that be part of actual cost? No, it will not be part of actual cost. Then you understood. Then for 15 days you consistently paid 10,000 rupees. Will this be part of actual cost? So this 1.5 lakh you will depreciate. Okay. Then remaining 2 lakh rupees you paid by account paycheck. So this will also be part of actual costs. Yes. So the ultimate actual cost of this asset is how much? 3.5 lakh. You can check it over here. Okay. This is how you are supposed to find out the actual cost to claim depreciation while computing the sums. Okay. Check it once. From the seller point of view, we will talk about that later. Okay. Right now, we are talking from the point of view of the buyer to claim depreciation. Is this clear? Okay. Let's go ahead to the next part of the definition of actual cost. As I have told you, actual cost is a very big discussion. The next part of the actual cost is, first we have seen the definition. Actual cost means actual cost as reduced by that portion which is made by any person or authority. Second, we have seen if you make a payment of more than 10,000 rupees to a person in a day, you have to be very sure that you make the payment by 4 modes. Okay. Or else you do what? You break the entries into multiple days. Correct? That's what you do in articleship also for your clients. Yes? To evade tax. Yes? Your clients make the payment of 25,000, 30,000, 40,000. They don't know anything. The accountants pass entry like anything. Then you break that entry into multiple days. Yes or no? That is the trend across the country. Okay. Everybody does that. So same thing you have to do for fixed asset also. If you make the payment of cash of more than 10,000 in a day. Now, let's talk about the next part of the definition of actual cost. What all things will be coming as a part of actual cost to depreciate the asset. Suppose I have taken a 10% loan of 100 lakh rupees to start a business. I want to start a business. Okay. So with the help of this loan, I am doing what? I am setting up my factory. I am setting up my plant and machinery, etc. Okay. And after a few months, say I started this on 1/4/1995. And say after 3 years on 1/4/1998, my business is what? Commenced. Okay. So the question is, what will happen with the interest? The total interest for the 3 years will be 30 lakh rupees. What will happen with the interest of these 3 years, which I have incurred before the commencement of the business? So you will do the same treatment as you do in your accounting standards. What do you do in the accounting standard for this interest? It is considered to be a borrowing cost, correct? There is a separate accounting standard for that. And you have to capitalize that to the cost of asset. Once the business is commenced and the assets are what? Put to use. After that, what you will do with the interest? Please tell me. Tell me. You will take it to the P&L account. It will be considered to be what? A revenue expense. In income tax law, interest is allowed as a revenue expense under section 36, subsection 1, clause 3. This is the section which allows you the deduction of interest in PGBP. So even in income tax law, you will give the same treatment as you give in what? In the accounts. Till the time the asset is not put to use, you have to capitalize. Once the asset is put to use, you have to take it to the P&L account. Is it clear? So this same treatment is there in the what? Income tax. You can read it from here. This is a very famous example. It will come in your sum again and again, where they will deliberately give you the assessee has taken a loan in the month of April, then the assessee has purchased plant and machinery, but the plant and machinery is put to use from October. Okay. So what will you do with the first 6 months interest? You will capitalize to the asset and claim depreciation. Okay. If the assessee is a manufacturer, then you will claim along with depreciation what? Additional depreciation also. Okay. I am saying you again and again so that when you do the question, it should click to you. Okay. Shall I go ahead? Now there is a small ICDS. There are two ICDS over here. One is on tangible fixed asset and one is on borrowing fixed asset. Okay. Borrowing cost, sorry. Which is there in your accounting standard 16 also. Tangible fixed asset tells us the same thing which I have told you, that if the expenditure is relating to asset, if it is necessary to put the asset into what? Working condition, then you should capitalize those expenses to what? To the cost of the asset. Check it please. Admin and general overhead expenses are to be excluded from the cost. You should exclude from the cost if they do not relate to a specific tangible asset. If they do not relate to the asset, exclude. Expenses which are specifically attributable to the construction of a project on acquisition of a tangible asset or bringing it to its working condition, if it is necessary to put the working asset into working condition, it shall be included as a part of what? Cost. Similarly, expenses incurred on startup, commissioning or test runs. Before the production, real production start, we do some kind of test runs, correct? So whatever expenses you incur on test runs of a particular item or particular manufactured product, that should also be what? Capitalized. And once after the plant has begun what? Commercial production. Once you have started the production, after that all your expenses should be what? Considered to be a revenue expense. It should go to the P&L account. We don't know the list of expenses. There are hell lot of expenses which can come, like salary paid for what? Installation of what? Plant and machinery. Generally salary is a part of P&L, correct? But if it is with respect to what? Installation of a plant and machinery, then it should be capitalized to the cost of asset. Okay. So any expense which is necessary to put the asset into what? Working condition, you should capitalize. If it is not important to put the asset into working condition, then you can take it to what? To the P&L account and you can claim the expense as a revenue expense. Okay. There is one ICDS on borrowing cost. So before we get into the ICDS, let me give you one example first of all, and then we will go with that ICDS. Suppose this is my balance sheet. Pay attention on the board, please. In this balance sheet, I have taken a loan of 10 lakh rupees. And I am myself saying that the purpose of this loan is for a qualifying asset. Have you heard this word? Tell me. So what is a qualifying asset? Yes, I'm getting the proper words from you all. A qualifying asset means an asset which takes a substantial period of time for it to be ready for its intended use, correct? It's an asset under construction which will take substantial time. Generally, that substantial time is, it is more than 1 year, correct? Can it be lesser than 1 year also in some cases? Yes, you would have done all these things in your accounting standards. You will also do that in the financial reporting in CA final also. In your Ind AS also, similar provisions are there. So I have taken this loan to construct an asset. Okay, the asset is now qualifying. It is not ready. Now, because I know that this loan is specifically for what? Qualifying asset, I should close my eyes and directly capitalize to the cost of asset, correct? There is no second thought about it, correct? I know that this loan is for what? This is for qualifying asset. But there can be another loan in the balance sheet. There is another loan in the balance sheet of 10 lakh rupees, which is a what? General loan. Some portion of this might have gone in qualifying asset, correct? Some portion of this might be in cash and bank, correct? Some portion of this might be in some other fixed assets, correct? I don't know. That is a general loan. The money came to the business and then I don't know this money went where. Okay. Money does not come with a tag. Nah, this money will be going for this purpose only. No. I don't know where this money has gone. Yes, the first loan I am very sure. Because the purpose of that loan itself is to put that money where? For qualifying asset, to construct that asset. So this interest will be automatically capitalized. Okay. Now what about this interest? So there has to be some fictional mechanism to capitalize this interest, correct? Exact nobody can compute. So the law has to give us some fictional mechanism to capitalize this interest to the qualifying asset. The law is not saying that capitalize entirely. That is also wrong. The law is not saying that do not capitalize anything. That is also wrong, correct? There has to be something in between. So how much interest from this general loan will be capitalized to this qualifying asset? For that, the ICDS is giving us a formula. Shall we see this? Tell me. Left hand side, if the funds are borrowed, what will you do? Directly capitalize. Don't think much. Check. The issue is not with this. Clear? The issue is with the general loan. If the funds are borrowed, right hand side, tell now. Generally for qualifying asset. It is not specifically for qualifying asset. Correct? Some portion of the fund has gone in qualifying asset. Some portion is there in some other place in the balance sheet. Now nobody knows how much is where. Okay. Then the law is giving a formula how much to capitalize. Okay. What is the formula? A into B divided by C. So they have to define what is A, what is B, what is C. Tell me. So what is A? A is your interest on your general borrowing. Check. What is A? Interest on your general borrowing. Whatever is your interest on this second loan. This loan. That you have to take as A. Okay. Now some portion of this has to be capitalized. Correct? Not entirely. What is that some portion? That is multiplied by B divided by C. Correct? So first of all, see what is C. Then we will see B. What is C? Average amount of total asset appearing in the balance sheet on the first day and the last day of the previous year. Okay. So take the total of the balance sheet on 1st April 2025, 31st March 2026, take an average. That is your C. It's very logical. See on the board, please. This is the balance sheet. I'm making two columns in the balance sheet now because I want averages. This is 31st March 2025. This is 31st March 2026. This is 25. This is 26. Pay attention. There is a 10% loan over here. Of 10 lakh, the amount of the loan is same, but this is a general loan. There is a qualifying asset over here. Okay. There is a total over here. Total is say 50 lakhs and now it is 60 lakhs. Okay. So in this example, what is A? 10 lakh is the loan amount. What is A? 1 lakh. Correct. What is C? It will be 55 lakhs. Now our duty is to find out of this total, how much is qualifying, correct? That much will be capitalized to the qualifying asset, correct? Now there are three possibilities in B. In B there are three possibilities. Check. 1. First take average of qualifying asset in the balance sheet on the first and the last day. So first possibility is suppose on the first day qualifying asset is 25. On the last date is 30. So you will take 27.5 as B, correct? Are you clear? This is the first possibility. Now, there are two more possibilities over here. Check. A and C will remain same only. B. Second possibility. Either of the three will happen. All three cannot happen together. In case qualifying asset does not appear in the balance sheet on the first day, is it possible? On 1st April, qualifying asset is not there. How it is possible? You started constructing the asset in June, correct? So on first day it is not there. Or it is not there on both. Is it possible it is not there on first day and last day both? How? It started in June, completed in February. Are you clear? Yes. Then what will we do? Check. Then take the half of the cost of qualifying asset. Okay. Whatever is the cost of the asset of the qualifying asset at the time of completion, take what? Take half of that. Is it clear? So first point, when you will follow? When it is there on both the dates, correct? Second, when it is not there on the first day or it is not there on the both the days. What is the third possibility? It is there on the first day but not there on the last day, correct? That is the third possibility. In case the qualifying asset, tell me now please, does not appear in the balance sheet on the last day, it means it is there on the first day. Yes, then take the average again, first day and on the date of put to use. Okay, so first day the value was 30 lakhs. In December you have put to use, at that time it was 40 lakhs. Okay, so take the average 35 lakhs. Is it clear? So for B you have to check whether it was there on the first day, whether it was there on the last day, whether it was not there on both the days, whether it was there on both the days. In fact, there are 4 possibilities, correct? Because in point number 2, they are raising 2 possibilities. Check it, please. So if it is there on both the days, then it is very simple. Directly take average. If it is not there on both the days, then half. If it is not there on first day, but there on last day, then tell me average. If it is not there on what I said, the third point that I only forgot. If it is not there on the last day, but it is there on the first day, then first day and on the date of put to use, whatever is the average, you take the average. Okay. Last line again, they are saying once the asset is put to use, once the asset is, then you will take that interest cost where? To the P&L account, and the relevant section will be which section? 36 subsection 1 clause 3. Please check it. Please remember this section, very important section. Is this clear, all of you? So what we have done so far in the definition of actual cost. Okay. We have seen the meaning of actual cost. What do I mean by actual cost? Tell me first. Actual cost of the asset as reduced by that portion. You need to speak. The more you speak, you will be able to write also in the language. You need to understand that we need to be used to with the language also. Now, to write down, we need to be very fluent with the language. So actual cost means what? Actual cost of asset to the assessee as reduced by that portion which is made by any person or authority. So why they are using the word actual cost? So that we should include all those expenses which are necessary to put the asset into working condition. Okay, then we started with the discussion of that 10,000 rupees provision. If you pay more than 10,000 rupees to a person in a day other than 4 modes, then the expenditure shall not form part of actual cost. Okay. My question to all of you is, in that case, I will lose depreciation? Tell me now. If I pay more than 10,000 in cash, will I also lose additional depreciation? Louder. Why? Because go and see the provision, that is also 20% of actual cost. And if some expenditure which will not be part of actual cost, then that portion will not be covered under what? Additional depreciation also. Additional depreciation will also be lost. Are you clear? That will also be not allowed to you. Okay? Normal also gone, additional also gone. Once, if the asset is worth 10 lakh rupees, if one of the payment I make more than 10,000 in cash, will I lose the depreciation on the entire amount? No, only that portion. Are you clear? Rest, if you have paid online, you can claim. Okay. Only that much expense is not allowed as a part of actual cost. Okay. Remaining expense, you can claim depreciation. Perfect. So which modes of payments are absolutely not allowed beyond 10,000? Cash, bearer check, and cross check also not allowed. They want account pay check, account pay draft. Okay. ECS. or such other prescribed mode. We will see that prescribed mode, what all things come in that. Okay. Orally, I have told you, I will also make you read from the book after some time. Then comes, once you, till the time you don't put to use the asset, what will you do with the interest cost? Capitalize to the cost of asset. And then you will what? Once it is put to use, then you will charge to the P&L account. Okay. And the last thing, we saw some extracts of ICDS with respect to tangible fixed assets and borrowing cost. Now let's move ahead with the next part of actual cost only. I have told you actual cost is a very big discussion. Okay. Before that, I would like to say one thing regarding the claim of depreciation. See on the board. Please tell me what will happen in this case. This is 25-26. On 15th of April 2025, I purchased a furniture of 1 lakh rupees. I also put to use the furniture. Okay. Now on 25th of March 2026, I sold the furniture. Okay. Now while computing the depreciation, you will compute depreciation in AY 26-27 while computing the PGBP income, correct? Will you get depreciation on this furniture? Block is not there. This is the only asset. Tell me. Will you get? No. In accounts? In accounts, you will get for the number of days. Proportionate. Approximately, you can remove 14 days from start and 6 days from back. For 345 days, you will get in accounts, correct? But in tax, in tax, in the year of sale, you don't get depreciation. Okay. Because one of the primary condition to claim depreciation in tax is the asset should be part of block on 31st of March. Correct? So this is one of the biggest disadvantages of block system. You don't get depreciation based on number of days you used. Even if you have used for 364 days and you have sold it on 31st March, you will not be eligible to claim depreciation. Are you clear? This is very, very important principle for you throughout this chapter. Till the time we don't complete depreciation, this will be helpful for you. Now, 43.1, actual cost. The term actual cost means actual cost. But now the government has created some exceptions to this rule. The government has created 13 exceptions, not 1 or 2. 13 exceptions. Whereby the government says that now the actual cost will not be actual cost, it will be something else. What I said? The actual cost will be something apart from actual cost. It will not be actual cost. Now this has been done with 3 intentions. See on the board. Either this has been done with an intention of giving you a relief. Why? The government wants to give you relief because you are doing business and profession. It's a very important head of income for the economy to boost. Therefore, we are giving you relief. Second, the government has done this where actual cost is no more actual now. It is something else. Once you learn the 13 explanation, now you can classify all 13 into these 3 points. Second, why the government has done so is to reduce tax evasion. You are trying to manipulate the law with the help of the definition of actual cost. How? You will learn in the next 15-20 minutes. Okay. Third, it's a clarification from CBDT. Even if CBDT would have not given this, people would have understood in the same manner, but still CBDT prefers to give you what? A clarification so that there is no disparity between people. There is a clarity amongst people. So one by one, we are going to do 13 explanations. Some of the explanations we may not do today. They are related to some other provisions. Some of them are related to scientific research deductions. Some of them are related to 35 AD. Some of them are even related to capital gains. So out of 13 explanation, maybe around 8 to 9 explanation we can independently do today. So that we are going to touch today. The rest we will take up with the respective chapters. The very first explanation that we are going to do today is explanation 2. Pay attention, please, all of you. What does explanation 2 says? I will read it from the book, but let me explain first. I am Mr. A. This is Mr. B. Previous year 23-24. Mr. B has purchased one computer of 1 lakh rupees and he has put to use that computer for business and profession on 15th of April 2023. Check the data very clearly on the board. What Mr. B has done? He has purchased the computer. He has used for business and profession, and the worth of the computer, the actual cost of the computer is 1 lakh rupees. Okay. Now, after 2 years, on 15th of June 2025, Mr. B has gifted this computer to me. He has done what? Gifted this computer to me. He has given that asset as a gift to me. Okay. Now, technically speaking, please tell me, from the perspective of Mr. A, what is actual cost? Louder. Zero. He has not paid anything, correct? But the law says that now the actual cost will not be actual, it will be something else. So what is that something else? That is given under explanation 2. So let's read this. Come here, explanation 2. What does it covers? Asset acquired by way of what? You have received the asset in gift, or you have received the asset in will also free. Yes or no? Or in inheritance from your parents, grandparents, free of cost. Okay. So there are 3 things which are covered over here. As a gift, as a will, or as an inheritance. Technically, what is the cost? Zero. But government is giving you relief. Okay. Something will be given you as a cost. Check. What is the cost right hand side? Please tell me. Actual cost to the previous owner. That is Mr. A. Correct? Less depreciation actually allowed to the previous owner. That whatever is the, can I say whatever is the WDV in the hands of the previous owner, that will become my cost. So please give me the answer of this particular question. How much will be the cost in my hands? Take your calculator, or you can do orally also if you want to. Think and answer. Think and answer. Think. How much? 36,000. Is it clear? See, from the perspective of Mr. B, think. In first year, which is the first year for Mr. B? 23-24, he will claim 40%. So the WDV at the end of the first year will be 60,000. 24-25 also he will claim. So the WDV at the end of the second year will be 40% of 60,000. That will come to 36,000. Are you clear? 25-26 Mr. A will get? No, he is transferring the asset. In the year of transfer, you won't get depreciation. Are you clear? Therefore, in your hands, the WDV will be how much? This will become your actual cost. Technically speaking, it is, but the government is allowing you the actual cost. Otherwise, you will bear the burden of capital gains at the time of sale also. Are you clear? So the government is allowing you the cost. Okay, is this clear to everyone? So now what you do, you go to the textbook. I have put one example on whichever explanation there is a need for an example I have put. You have to get me the answer of this question, please. Page number 2.13. If you have understood the concept, you need not have to go to the textbook at home. Read from the color book directly. Okay. Wherever you are having some doubt with respect to particular provision, come to the textbook, see the example. Okay. Even after that, if you have any doubts after the batch also, I am going to give you a call phone number. You can WhatsApp me on that number at any point of time. Okay. Which is there on our books also, I guess. 8977 number is there now. You can WhatsApp on that number. Just mention below that you are from Guntur Center. Okay. And online students can also WhatsApp on the same number for if you have any doubts. How much it is coming? So, the previous owner has acquired the machinery when? Which financial year? 2021. So, in the first year, he will get how much depreciation? 7.5. Correct? So, 2021, 7.5, 21, 22, 15, 22, 23, 15, 23, 24, 15, 24, 25 also 15, and 25, 26 he is transferring you. So 25, 26 he will not claim depreciation, you will claim depreciation. Correct? You will claim depreciation on 48,000. One more question. You will claim how much depreciation in the current year? No, in the current year, the buyer, the person who is receiving the gift. The cost is 48,285. Correct? Now, how much depreciation he will claim? Full or half? Full or half? Half. Because he is getting the asset when? 31st December. So, he will be using the asset in the current year for less than 180 days. Yes or no? So, he will use into 15 into 50%. Is it clear? Mr. Y will get half depreciation. From next year onwards, Mr. Y can claim how much? Full depreciation. Is it clear? So this explanation gives you what? A kind of relief. I've told you at the beginning that there are three reasons why the government has changed the definition of actual cost. Either to give you relief, either to reduce tax evasion, or to give a clarification with respect to certain points. Now the next one, pay attention. See on the board, please. There is Mr. A here. There is Mr. B here. He is my friend. Pay attention, please. Please don't talk. There is an old air condition kept at my friend's office. Very old. Around 7-8 years old. Of not very big, 1-ton AC is there. Okay. I'm giving you the description so that you can think few things beyond that. So old AC is kept at my friend's place of 1 ton. The WDV of that AC is around 30,000 rupees. That is the only asset in the block. Okay. Are you clear? Now, we are trying to manipulate some taxation provisions over here to claim benefits. My friend has some short-term capital losses of around 9,70,000 rupees kept, which is going to expire soon. Okay. It is carried forward for 8 years. So 5-6 years have gone. Okay. Anyways, after 2 years, it is going to expire. It will be lost. Correct? You have to, every day you should come to class and think as if today how we are going to evade tax. Please. Only then you will learn what? Income tax. You should learn it. I'm sorry I'm teaching this. Okay. But I have to teach this. Every day you have to think like this. How can we manipulate the law? That will make you a good practitioner. So 9.7 lakh is a loss. So we both were sitting together having lunch, dinner, coffee, whatever it is. And we were thinking that what can we do from this? So I told my friend that you sell this AC to me for 10 lakh rupees. How much? Okay. I will pay you 10 lakh online because I want to claim what? Depreciation, and then you can withdraw the cash and give it me back. Correct? Are you clear? Obviously, I am not going to buy this old AC for 10 lakh rupees. Correct? I paid him online because I want depreciation. Then I told him that you give me the remaining money in cash. On paper, we will show that I purchased for how much? 10 lakh rupees. Nobody will come to know that how much cash you have given me. Now, what will happen? Because of this, I will claim depreciation on this 10 lakh rupees. How much percentage? 15%, 1.5 lakhs. I will claim depreciation. I will save my tax. Correct? My friend will also compute his capital gains. Correct? What is the selling price? 10 lakhs. What is the cost? WTV has to be taken as cost. What is the gain? We will set off this 9.7 against this. Okay, anyways, it was getting lost. Yes. So my friend will not be having any kind of disadvantage. Okay. I will tell him, now you will not be under any kind of loss. Don't worry. Okay. But I will be at the profit. Okay. I will have two profits. First, my cost is more, so my depreciation is higher every year. Second, whenever I will sell, I will not sell for 30 lakhs. Okay, I will sell for 10,000 rupees only. Correct or not? Because I know the worth of this AC is 30,000 today. Tomorrow it will be 10,000 rupees. Correct? So I will claim what? Huge amount of capital losses also. Are you clear? Very simple. So what do you feel? There should be some provision to stop this? Tell me now, please. Explanation 3. Please read. Explanation 3. Asset acquired with an intention of claim higher depreciation. Are you acquiring the asset with an intention to claim higher depreciation? Who the hell buys a old asset, 7-8-year-old asset whose WTV is 30,000 for 10 lakh rupees? Who buys here? It is very clear that you are trying to evade tax. So in that case, right hand side, see how the actual cost will be determined. The amount determined by AO. Who will determine? The AO will determine the value of the asset. But AO will, suo moto will not determine. AO will ask the joint commissioner. Okay. With whose approval? Joint commissioner approval. Normally the AO will take what? The fair market value of the asset. So now during the assessment, what will happen? I'll tell you. During the assessment, the AO will see that you are buying an asset of 10 lakh, correct? The AO will ask for the invoice. Tell me now, please. In the invoice, the AO will see 1 ton AC, 10 lakh rupees. Okay? So he will be very much doubting this particular transaction. So he will tell the assessee, I want to verify the AC. Yes? He will come to your office. Will you allow him? or no? Obviously, you have to allow him if he wants to verify the asset, correct? He is not doing any raid or survey on you for which he wants a warrant. He is not doing all those things. He can come for physical verification of the asset. He is coming for the physical verification to Mr. A's office and he's checking that this is a very old AC. So he will attract explanation 3. He will go to the office back. He will go to Joint Commissioner. He will say on this day I went to assessor's office. They have bought some old AC for 10 lakh rupees. I want to attract explanation 3. The Joint Commissioner will give the green signal. He will say go ahead. Now the AO will appoint one valuer. What AO will do? He will send the valuer to your office. The valuer will say the value of this AC is only how much? Say 30,000 rupees. Okay. Recompute the depreciation based on 30,000. It will come to how much? 4,500 rupees. Please tell me. And therefore the AO will add back how much? 145,500 he will add back. Are you clear? You are claiming how much? 1.5 lakhs. Are you clear? And you are eligible to get how much? 4,500 rupees. 145,500 he will add back. He will take tax from you. He will take interest from you and he will also take 200% penalty from you. How much? Over the period of time, you will learn all of them. How interest is charged, how penalty is charged in case of tax evasion. So please don't do such kind of things, okay? Even if you want to manipulate, there should be a marginal difference, correct? A 30,000 item you are buying at 40,000, nobody will raise question. You are buying a 30,000 item for 10 lakh rupees. You are inviting the assessing officer. You are inviting the attention now, obviously. Now, one more thing. What is going to happen here? Listen carefully. Is the AO changing your actual cost? Louder. With the prior approval of joint company. He suo motu cannot do. He has to take the approval from higher authority. Okay. The joint commissioner is the senior to the assessing officer. He changed from 10 lakhs to 30,000. Louder. Now, one more thing you need to keep it in your mind. Listen carefully. The seller cannot change the selling price. The seller will keep the selling price as, otherwise seller will say, my selling price should also be 30,000, correct? So that this loss is not getting used, correct or not? The selling price will remain 10 lakh only. Did you understand what I said? Because explanation 3 is from whose perspective? Buyer's perspective. There is no amendment for seller. Are you clear? Check it, please. Check this example in your detailed textbook. I have put complete example from the perspective of two person, Mr. X and Mr. Y. One is buyer, one is seller. Okay. Now this will mostly happen in case of second hand assets. New assets, obviously, if you go to a showroom, they will price you at the fair, they will sell you at the fair price only. They will not manipulate for you. Okay. This you can do with someone whom you know, correct? Read? So what is happening in this example? Pay attention. Opening WDV of the asset in the hands of, who is Mr. X? X is buyer or seller? X is seller. Y is buyer. So the seller has a WDV of 10 lakhs. Okay. The PGBP income is 4 lakh before depreciation. He has a capital loss of 1 crore 20 lakhs. Correct? Now he has a WDV of 10 lakh. Now he is deliberately selling at 130 so that his gain comes to how much? 120, and he can set off this entire 120 against loss. Correct? And therefore he will pay tax only on how much amount? 4 lakh rupees. What is the benefit to the buyer? The buyer will get depreciation on this opening WDV plus 130. Correct? Yes or no? But this is manipulated amount. Correct? So the AO will come into picture. Will say that this is not acceptable. What is not acceptable? This 130 is not acceptable. He will ask the joint commissioner. He'll take the approval and he will appoint a valuer and he will value the asset. Now the valuer says that value is how much? Only 15 lakhs. So you have to recompute your income. So now you cannot claim depreciation on 1.5 crores. You have to claim depreciation on 35 lakh, whatever is the difference income. The difference is huge, correct? That will be added back. You have to pay tax, interest, penalty, so on and so forth. Okay. At the same time, the seller will not be able to change what? The selling price because of this explanation. Is this clear? For seller, the selling price will remain 1 point. Tell me 1 point. 1.3 crore only. Is it clear? So this was explanation 3. Now the next assessee. What the next assessee is doing, see. See on the board, please. This is previous year 2020-21. I am Mr. A. I am purchasing a furniture for 1 lakh rupees. Say on 15th April 2020, and I have put to use the furniture. Okay. Now 2020-21 has gone, 21-22 has gone. Now in previous year 22-23, I sold the furniture. Sold to Mr. B. Okay. Then in previous year 23-24, Mr. B sold to Mr. C. Then after 1 or 2 years, Mr. C sold to Mr. D. So we are trying to make a chain over here. Pay attention, please. And then after few years, I purchased back. Okay. The asset for how much? Say 1,60,000 rupees. Okay. Say in previous year 25-26. So technically speaking, what should be my actual cost? In 25-26. 25-26. 1,60,000 actual cost means, then definition I am saying, actual cost means actual cost to the assessee as reduced by, actual cost to the assessee as reduced by that portion which is met by any person or authority. Correct. But in this case, the government says if an assessee sells an asset and then reacquires the same asset, then the actual cost will not remain actual cost. It will be determined as per explanation 4. Please read. during lifetime. Now, practically, it is very difficult to trace such transaction. So that is the job of whom? Assessing officer. If he traces, he will apply. If he doesn't traces, then you claim on 160. Are you clear or not? So obviously, it is the duty of the assessing officer. I am not going to show this. Okay. I will claim on 160 only. If the assessing officer catches me, then he will say that explanation for why the hell you have not applied. You should have applied explanation for. What does explanation for says first of all? WDV at the time of original transfer. Original transfer means what? When A has sold to B, correct? What was the WDV at that time? Just compute. Sold after 2 years, not one. 81,000. It is sold after 2 years in the third year. Tell me please. It is 81,000. Check the provision. WDV at the time of original transfer or reacquisition price, whichever is lower. So the answer will come to how much? 81,000 is the one you are going to claim as depreciation. Check it please. Is it clear? There is an example over here. They ask such type of questions in the exam. You just see that, see this, I'll show you. Continue the example. I'll open the file. Please don't talk, please. Pay attention here, please. So, three special cases we have seen so far. First case was gift. Second, one a gift, will, and inheritance. Everything was covered in first explanation, explanation 2. Second was, how will you come to know in the exam that this is explanation 3? How will you come to know? So they will give you in the exam, listen, the market value of the asset is 2 lakh and you are purchasing for 5 lakh. Is it sufficient enough to tell you that this is explanation 3? Please tell me. Yes, you are purchasing at higher than the market value. It means it is explanation 3. Are you clear? We need to also identify now that this is this case in the paper. This will come in the form of an adjustment. They will not ask you a full-fledged question on this. Okay. This will be a part of your total income adjustment. How will you come to know that this is explanation 4? It will be written very clearly that first you have sold and then you have reacquired. Reacquired word will be there. Okay. The moment it comes, it means that explanation 4 is applicable. Okay. At the end of the lecture, I will ask you the answers. You try to give me the answer at the end. Right now, obviously, you will be remembering the things. Now, next explanation, see on the board, please. Explanation 4A. Pay attention, see here, please. I am Mr. A. There is Mr. B here. He has purchased the furniture. Don't talk, please. For 1 lakh rupees. He has been claiming depreciation under section 32 for the last 2-3 years. So his depreciation is 19,000 and his WDV today is 81,000. Okay. Now, what I am doing with Mr. B, Mr. B is also my known person, he is my friend. I am telling him that please sell this asset to me. Say for rupees 1,50,000. Okay. Is it clear? But Mr. B is saying that why the hell I will sell you the asset? I need the asset for my business. Mr. B is saying I need it for my business. Why will I sell you? I told him you use it for your business. Okay. I will tell you how. But first you sell it to me. So he sold me. Okay. For 1,50,000. And then I told you, then I told him, Mr. B, that I will lease back you. I'll give you the same asset for lease. You can continue using it. Okay. On paper, we will show that I have purchased from you and then I have given on lease to you and you are paying me the lease. Are you clear? So that I can claim depreciation and you can claim lease rental as an expense, as a business expense, PGBP expense, correct? We both can do this. Is there anything wrong in this? Can the government stop me to do this transaction? Nobody can stop me. If you have something, I can take that from you and I can lease you back. There is no law in this country to stop such things, correct? Max to max in income tax law, you can stop my depreciation, correct? You cannot stop me to do this transaction. Yes. Even in the previous cases, you have not stopped me to do the transaction. If I am buying at a higher price from my friend, nobody can stop me, correct? You can restrict my depreciation. Here also they are doing the same thing. What are they doing? Read the provision. Asset purchased and lease back to the same person. Who is that same person? Mr. B. Who is purchasing? So what will be the actual cost in the hands of Mr. A? Check the provision. It will be WDV of the previous owner. What is the WDV of the previous owner? This will become actual cost in your hands. How much? Tell me please. 81,000 and not 1,50,000. You, no matter you purchase at 10 crore rupees. We are not concerned with that. Okay. If you purchase and then lease back, Then whatever is the WDV in the hands of the transferor, that will become your actual cost. Check it, please. You write down this example in your book, please, that this example is not there. But this is not very important also. The first three were very important. So the last three examples were with respect to some kind of tax evasions. Okay. The first one was with respect to giving you relief. Okay. Written? Now I am asking you a general question, not with respect to any explanations. A general discussion I am doing. You please try to answer based on your logic and common sense, please. This is financial year 2025-26. You are a student, a CA student. Yes? Thank you. Now, you have purchased one laptop for watching lectures, say 30,000 rupees, 40,000 rupees, whatever it is. Okay. So, for watching lectures, you have bought one laptop or for your office work, etc. Articleship. Pay attention, please. Obviously, you are not claiming any depreciation on this today because you are using for your personal purpose. 25-26 gone, 26-27 has come. You are a student. 27-28, you are a CA students remain students for a longer period of time. Yes or no? CA? CA or student? CA. You have become a chartered accountant now. Okay. Now listen, don't talk, please. Now, say for example, now you have planned that you are not going to do any job. Say for example, you are starting with your own practice. So you are a practicing chartered accountant now. Okay. Now, for practicing chartered accountant, you need a place, you need some few assets, correct? So you are planning to, as of now, start from your home only. Okay. You need one laptop, correct? Which you have already. Yes. Are you clear? You need one phone which you already have, correct? So you don't need any kind of great investments, right? Later on, we can think about opening one office separately. But at least to start, we can start with this. So now the question is, an asset which was used for what purpose is now brought into business or profession use, correct? So what will I get depreciation now? Will I get depreciation on this laptop now? Yes, now I deserve to get a depreciation. So the question is, what will be the actual cost of this asset? Okay. So what do you feel? What will be the actual cost of this asset? General knowledge, you can answer me. Huh? WDV. Deemed WDV. WDV is not there only, na? What is WDV we have learned today? Tell me definition of WDV. Actual cost minus depreciation. What is depreciation actually allowed to you so far? Huh? Zero, na? So, by that logic, your WDV is 30,000, correct? Are you clear or not? So, what is the actual cost? Market value? Fair market value in 2027-28? Tell me. Tell me all possible answers that come to your mind logically. One logical answer, you can take the WDV which might be there today, correct? One possible answer might be to take what? The market value in 2027-28 when you are bringing in business, correct? Now let me tell you, give you information. There is no specific explanation for such case. Now give me the answer, what will be the actual cost? It will be 30,000, okay? So if you bring your, listen carefully please, if you bring your personal plant, machinery or furniture into business and profession, there is no explanation for that. No specific explanation in 13 points. So if there is no explanation, actual cost will be actual cost 30,000, claim depreciation on 30,000. Is it clear? If you bring your personal laptop into your office, if you bring your personal air conditioner into your office, if you bring your personal car into your office, if you bring your personal bikes into your office, if you bring your personal mobile phones into your office, if you bring your personal chair, table, whatever it is, sofa, etc. into your office, the actual cost is louder. Actual cost. Is there anything missing on the board? Means any asset is missing. What is missing? Building. Building is not mentioned. Okay. For building, there is explanation 5. Read it, please. Okay. For building, the government is not taking any chance. Building is a very expensive asset. Correct. This is one of the most hopeless explanation that you will ever see. You read the provision, you will come to know. There is a building which I bought in 2020. Okay. In which I used to stay with my family. Now I am converting that building into my office. Okay. So I have to take the actual cost of the building in 2020 minus I have to reduce notional depreciation of over the years. Are you clear? Yes. While reducing the notional depreciation, I have to take the rate of current year. Which rate I have to take? Current year rate I have to take. You check the provision first and then we will see what is the problem in this provision. So for building, the government is not saying actual cost is actual cost because it's a huge expensive asset. Tomorrow Mukesh Ambani will start to convert his Antilia into an office and he will claim depreciation on 15,000 crore rupees. Correct or not? Because that house is worth 15,000 crore. Correct? So for building, we are not taking any chance. Building, you have to find out the WDV today. Are you clear? But this is very hopeless. If some building you have purchased around 30 years back, tell me, what will be left today as a WDV? Are you able to understand my point or not? 30 years back, you would have bought a building for 10 lakh rupees. A big building you would have bought for 10 lakh, correct? If I reduce the depreciation for the last 30 years, nothing will be left today, yes or no? Yes. So it's of no use. Nobody will do such kind of things, okay? To claim depreciation. Check it, please. Explanation 5. There is an example over here. My sincere advice to any person who wants to convert a personal building into a business building, please don't do that. Okay. Don't do that. Better you do one thing. You make one entity. Separate. You either sell them, okay, or you give on lease to them. Are you clear? And tell them to claim the rentals as an expense. Are you clear? Depreciation will not be beneficial to you. Make a separate entity, sell it to them at market price. Okay? Then tell them to claim depreciation at the current rate. Or give on rent to them, to the new entity, so that they can claim rentals as an expense. Taking the notional WDV is of no use, especially if the building is very old. If it is 1 or 2 years old, then it is okay. But for plant, machinery, furniture, you are not supposed to do all these things. These are small assets. Okay. For small laptops and computers, who will do all these things? Claim full. You have done all these things in CA Enter. It was there. Yes or no? For some people, I think so it was there. For some people, it was not there. Some people are saying yes, some are saying no. It was there. All these explanations were there in CA Enter also. But in final, it is more important. In Inter, it was not that much. Now, there are some explanations which I am keeping on hold as of now. We will be taking up this explanation in the chapter of capital gains. For that, we need to know the definition of amalgamation, demerger, etc. I am coming on explanation 8, which we have already done. You read this, you will come to know that whether we have done this or not. Explanation 8, please. Once the asset is put to use, after that, what happens to the interest cost? Will it be part of actual cost? No. That's what it is telling us. It's just a clarificatory point. That it will never form part of what? Actual cost. It will go to P&L account. 3613, you can claim deduction. Okay. 3613, we will see in the next 1 or 2 lectures. Now, next explanation is very important academically as well as practically. Explanation 9, see on the board, please. I am purchasing, see on the board, please. I am purchasing a machinery of 10 lakh rupees. I am a buyer. This machinery is a fixed asset for me. There is a seller over here who has sold me this machinery. Now, while selling the machinery, he would have charged some GST on me. Tell me, suppose this machinery is subject to how much GST? Suppose 18%. So 1,80,000 I would have paid him as GST. Total 11,80,000 rupees I have paid him. Okay. Now the question is, I want to claim depreciation. So on how much amount I will claim depreciation? The government is giving you both the options. Okay. First option, if you have claimed ITC for this, then your cost will be this. Are you clear? If you have not claimed ITC, then your cost will be 11,80,000. You can depreciate 11,80,000. at whatever is the rate, 15%, 20, 30, whatever is the machinery. I don't know the nature of machinery now. By default, it is 15%. Okay. Sir, is this a choice? Yes, it is a choice. Absolutely. Whatever you wish to do, you can do it. Now the question is, what is better? Claiming ITC is better on 1,80,000 or claiming depreciation is better on 1,80,000? ITC is better. Why? Why ITC is better? One by one, please. Yes, it depends on what? The credit. Okay. In that case, I should go with depreciation according to you? Yes, it all depends. No, if both are available, then what you will do? ITC is a better option? Tell me. Reason. GST monthly you are going to pay on 20th. Correct. So, you can easily reduce your cash payment by 1,80,000 rupees. Correct? Yes, definitely. Given a choice, ITC is better. I don't know whether you are thinking in this manner or not, which I am going to say now. Taking ITC of 1,80,000 rupees will save your how much money? 1,80,000, correct. But taking depreciation on 1,80,000 will save how much? Only 30% of 1,80,000, correct or not? That is only 54,000 rupees. Are you clear? Therefore, if both are available, then take ITC. But ITC may not be available in all cases, correct? Suppose if you are a hotel business, which business? Hotel businesses, small hotels, small restaurants. I hope you know all come under composition scheme. Yes or no? They have to pay 5% tax without ITC, correct? So in that case, what is better? They will claim depreciation on 11,80,000. Are you clear? So if it is possible to take ITC, take it. If it is not, or it is not allowed for you to take ITC, then take what? Take the depreciation on 1,80,000. Read explanation 9. Explanation 9 says only one thing. If you have taken ITC, don't take the GST as a part of what? Actual cost. Okay. Now ITC is not only available of GST, it is also available for other taxes also. You also get ITC for VAT, you also get ITC for excise duty, you also get ITC for custom duty also. In indirect taxes you will learn. Okay. So income tax law is not only talking about GST, it is talking about any kind of credit that you take for indirect taxes. Okay. Is it clear? Now, one last explanation I am taking up today. Rest we will continue in the evening. After that, we will just recap the entire depreciation, what we have done so far. But before that, I will take up one last explanation. Explanation 11, 10, I am skipping. That we'll see in the evening. That's a big one. It will take some time for us to do explanation 10. So, explanation 11 I am taking. What is explanation 11? Pay attention on the board, please. Mr. A is there. He stays in United States, USA. He is a non-resident in India. He is doing some business and profession in USA. Okay. Now he has purchased a computer over there of 1 lakh rupees in previous year 22-23 on 15th April 2022. Now, should India be interested in this? Tell me. India should not be interested in this. The person is non-resident. He is doing business outside India. Correct? He is not subject to tax in India. Correct? But now in previous year 25-26, this person has started a branch in India. Now, in this branch, he is sending this computer to India. Okay. On 15th of April 2025. Now, this Indian branch, will it be liable to tax in India now? Louder. A non-resident income is getting accrued in India, therefore he is liable to tax. Now, because he is liable to tax, he will ask for what? The depreciation on this computer, correct? So now the question will arise, what is the actual cost of this particular computer which is brought into India by a non-resident for business and profession? Are you clear? Understand this case. A non-resident is bringing the fixed asset to India for what purpose? For business and profession in India. Then what will be the actual cost? That is given in explanation. What? 11 to 43.1. Read it please. Nothing but WDV. Whatever is the WDV, that you can take as actual cost. Actual cost minus depreciation calculated at the rate as if the asset was used in India since the date of acquisition. Assume the asset was used in India since 22-23 and find out the WDV. Whatever is the WDV, that will become what? The actual cost in India. So how much will be the WDV in this case? Please calculate. 1 lakh minus first year 22-23. How much? 40,000. Then the WDV is 60,000. Then how much? On 60,000, 40%, 36,000. 24,000, sorry. So at the end of second year, the WDV is 36,000. Say, one more year depreciation. Tell me, what is the third year depreciation? Just calculate. 3 years depreciation you will take, na? 22-23, 23-24 and 24-25. In 25-26, he is bringing to India. So final answer comes to how much? 21,600 will be the actual cost which he will put in the block of asset in India, and he will claim what? Depreciation in India in this case. Okay. There is an example on this also. You can check it over here. The numbers might be different, but the example is on a similar line. Just see this example, please. Calculate yourself. 10 lakh minus how many years depreciation? First year half, correct? Because it is put to use for less than 180 days. Second year, 40. Third year, fourth year. This is AY. Don't get confused. Okay. This is AY. If you don't like AY, write PY 1920 as the first year. Okay. And in 24-25, he has brought in India. Correct? Is clear? So now what we will do? We will come to our first page. We have not completed depreciation. I told you it is not that easy to complete this. Okay. It takes time. Maybe in the evening session we will try to complete. But we are not in a hurry. If it completes, it's okay, or else tomorrow morning we'll complete. Now, come to this page and have faith in yourself. You remember everything, don't worry. The first page of depreciation. Okay. Section 32, subsection 1, clause 2. Close your books. I don't need the books now, please. Step by step, we'll go from top to bottom. Okay. In respect of Louder. Is the term building, step by step, is the term building defined? Louder. We don't know the definition of building. In respect of, is the term machinery defined? No. Is the term plant defined? Where? Section number if possible. 43, 3. Do we know the meaning of plant? Meaning? No. Do we know the inclusive and exclusive list of plant? What does plant includes? Ships, aircraft, books, surgical equipment. Correct? I am not much interested in the inclusive list. I want the exclusive list. What does it excludes? Tea bushes, livestock, building, furniture and fitting. I am interested in the last two words. Why building and furniture are excluded? Why they are excluded from the definition of plant? Because some people used to say that my entire structure is a plant. Who are those some people? Theater people, hotel people, hospital people. Correct? Building is building. It cannot be termed as plant. Okay. Furniture is furniture. Even if it is a specifically designed building, it is a building only. You have to claim 10% depreciation. Are you clear? Then, do we know the definition of furniture? Tell me. No. All these intangible assets, none of them are defined in the law. Okay. Understand in common language. Okay. Goodwill is non-depreciable. Forget it. Now coming to owned. What do I mean by the term owned? Beneficial owner and not legal owner. Registration, title, all of them are irrelevant. Where it is written? Is the term ownership defined in the law? Then who is saying this sentence beneficial owner? The Supreme Court is saying in the case of Mysore Minerals Limited. Okay. Wholly or partly, we don't know as of now. We will talk about this sometime later. What do I mean by the term? Use means what? Active as well as passive use is also covered. Passive means what? Something which is kept as a spare, as an emergency. Okay. Coming back to again owned. In case of lease transaction, who will claim depreciation? Lesser. Higher purchase. What has happened in that ICDS case law? ICDS was engaged in the business of long-term leasing of cars. Cars were in whose name? Department was saying what? The owner is customer, correct? What did the court say? Beneficial owner is the lessor and not the lessee. Department was saying that who is the car, using the car? Customer is having the steering in their hand, correct? The court said what? The car should be used in the course of the business and not actual usage, correct? And then you need to see the agreement also. Perfect. For the purpose, you should use the car for what purpose? That is obvious, correct? Depreciation shall be allowed on WDV. What is WDV? Minus depreciation actually allowed. What do I mean by a depreciation which is actually allowed to you? Which is helping to save the tax. If my business is partially agriculture and partially taxable, while computing the WDV, will you segregate the depreciation or you will fully reduce? Fully reduce. Don't segregate. It is deemed to be fully allowed for business, correct? Technically speaking, you should reduce only the 40% portion. But the law says that it is deemed to be fully business. Reduce fully from the cost, reduce your WDV, claim lesser depreciation in the next year. Are you clear? Then comes from WDV comes another definition. WDV is what? Actual cost. Then what is actual cost? Actual cost of asset to the assessee as reduced by that portion which is met by any person or authority. That 10,000 wala clause, you know. I'm not wasting time on that. Okay. Bearer check, cross check, aware na? The list of prescribed mode that I will show you. That is my duty. Tell you which all modes are there in the prescribed mode. From the book we will see later. Orally I have told you which all things come in that. Then I'm jumping directly to the explanation. Okay. I gave you an asset as a gift. What will be the actual cost in your hands? WDV in my hands. That will become your actual cost. Yes. Shall I ask you one question here now? I bought this phone as a personal phone, not as a business phone. Okay. Say I bought this for say 50,000 or 1 lakh rupees. I give this phone to you. Now you are using for business. Gift. I bought this for 1 lakh. As what phone? Personal phone, not as a business phone. I gave you that phone. What will be the actual cost in your hand? It will be 1 lakh. Are you clear? Because in my hand there is no WDV. Correct? Actual cost to the previous owner minus depreciation actually allowed to the previous owner is 0 rupees. Are you clear? So in that case, the cost in your hand will be 1 lakh only. Is it clear? Okay. I sell this phone to you for 6 lakh rupees. What will be the actual cost? What? No. Assessing officer will take the approval from and will determine the value. Are you clear? I sold this phone to Arun, correct? What's your name? Kanak. Balaji. Okay. I can pronounce your name, yeah. Please. You can tell me your real name, please. Balaji, I will say. Okay. I sold my phone to Arun. Arun sold to Balaji. Then I took again from Balaji. I purchased from Balaji once again. What will be the actual cost in my hand? WDB at the time of selling to whom? Arun. Or repurchase price from Balaji? Whichever is lower. Okay. I brought this phone from personal to business. What will be the actual cost? Actual cost. I bought my car from personal to business. I brought my house from personal to business. Now you have to compute. Minus notional depreciation taking current year rate. Okay. I sold my phone to Arun. Okay. And then I took the phone back from Arun in the form of a lease. What will be the cost in the hands of Arun? WDV in my hands. That will become the cost in the hands of Arun. Okay. Then last 1 or 2 points we have seen, that is ITC for that is very simple. There is nothing great, and non-resident point. Now let me go ahead with the next point. That is very simple now. Block of asset. Same asset, same category. Okay. We have the list of assets also at the top. Okay. Rates, I hope you remember. All the rates you remember. Professional books. Ships. Aircraft. Sure. 40%. Pollution control equipment. Computers. Motor vehicle by default. In the business of running them on hire. 30%. Okay. Now I will talk about additional depreciation. Okay. I am purchasing a air condition to be installed in my factory, which is necessary for the production. Will I get additional depreciation on that? Yes. Machinery kept in office is not allowed. Correct. Machinery kept in guest house is not allowed. Correct. Machinery kept in residential accommodation is not allowed. Forklift trucks allowed. Will additional depreciation also become half if I put to use for less than 180 days? What about balance half? In the next year, you can claim immediately. Okay. Who are the eligible assessees for claiming additional depreciation? Which product I should manufacture? Which product I should manufacture? Anything is fine. And apart from manufacturing, power generation, power distribution, etc. Printing, I'm engaged in publishing of books. Am I eligible for it? Printing and publishing? Only printing? That's it. We'll stop the lecture here. We will continue in the evening with the depreciation. Okay. Bye all of you.